television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
From New York and London, for our audience worldwide, good morning to you all. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. 2 hours away from the opening bell this Tuesday morning. Here's your price action. Equity futures taking a little dip lower, sneaking into negative territory, down to not even a tenth of 1% lower. In the FX market, a euro that is firmer, reclaiming a 117 handle, firmer by a third of 1%. Stronger euro, weaker dollar, the story through much of G10. There's the move in the bond market. Look, we keep joking about it, but it has really important implications, consequences for many people trying to put together a portfolio. 0.65% on a US 10-year. Yeah. Tom, and unmoved through the shakeout of the last several weeks. That presents a lot of problems for people trying to put portfolios together and trying to find that diversifier.
I'm so glad you bring this up, John. John Norman of J.P. Morgan was just lights out brilliant this morning on the lack of this anchor. I actually, John, brought up Mr. Dalio and Mr. Prince, and how they've gone in search of new anchors within their derivative strategies at Bridgewater. John Norman said this is fraught with risk. These are not equivalents to full faith and credit anchors.
Well, as Lisa mentioned yesterday, Tom, there is a story out there at the moment in the last couple of days that maybe the new position is just cash. So for all that cash in money market funds that people thought would be deployed into risk assets as things improved, I do wonder, Tom, how much of it will just sit there.
Oh, and it's a wall of money as well. I mean, there's a huge, huge wall of money, even as a wall of worry, maybe even fits and starts is built up as well. The conversation is so debate-driven today that when we have someone of market excellence on, maybe, John, we ought to get right to them. Eric Stein is at Eaton Vance Boston. His title's fancy. He's co-director of Global Income. But what I would point out is Eaton Vance and their invention of a lot of municipal bond portfolio management, their invention of being tax managed in portfolio management, obscures how well they've done on the balanced front. Their performance 3 years and even 1 year on their balanced fund, very tech-weighted, has been extraordinary. Eric, tell me about a balanced approach right now. How feasible is it?
Well, first off, Tom, thanks for having me on. Thanks for that. Thanks for the plug for Eaton Vance. That's great. You know, I thought the comments you were making in the intro were interesting, referencing John Norman at J.P. Morgan and some of his comments on the fact that 10-year Treasury hasn't moved, even though we've seen this risk off the past couple of weeks. Okay, yesterday was a risk on move in markets. And so, you know, I think investors are really saying, you know, what are we going to get? Are we going to get portfolio diversification from U.S. Treasuries going forward? It doesn't seem like it in this kind of small risk-off period. So, you know, I think maybe investors will move to other assets. I think Chinese government bonds could be something interesting as a portfolio hedge. I completely agree with you. They're not the same as U.S. Treasuries. And I wouldn't want people to think that, but I think, you know, when you take a global look at fixed income markets, I think that looks interesting.
Mr. Dozer and the old Eaton Vance would fall off their chairs if they heard you talking about Chinese paper as a full faith and credit alternative. Eric Stein, what do conservative clients do if they can't buy the nominal yield John Farrow's talking about?
Good question. You know, as I said before, it's certainly not full faith and credit of the U.S. I think it's another option. You know, as you mentioned before, okay, you know, cash is an alternative because it gives you, you know, so-called, you know, dry powder to jump in and buy assets when they get cheap. You know, that being said, we have a Fed that's explicitly trying to inflate at over 2%. I know there's been some back and forth how much over 2% and how committed are they, but, you know, with cash rates at essentially zero, keeping your money in cash is going to give you, negative real yields, going forward. So there's clearly option value in the cash, but you're not protecting against inflation. You're not helping your future purchasing power, directly by investing that way.
Eric, quite clearly the last couple of weeks has demonstrated and reinforced the argument that there's not much downside left to 10-year Treasury yields. But let's just question the consensus for a moment. Over in Germany, I know a very different policy rate, a very different backdrop for inflation expectations, but we do have a 10-year nominal yield of negative around about 50 basis points. Eric, I know we won't see it at a policy level in the United States. The Fed doesn't want to go there. But what's to say we won't see it in the market?
Yeah, so look, it's possible, if the Fed, buys more, if the Fed, commits to yield curve control, out to the 10-year point. They haven't committed to yield curve control at any point in the yield curve. So, I think, if we were having this conversation 10 years ago, we'd think it's crazy talking about negative yields in Germany. So I think completely discounting it in the U.S. would be wrong as well. But I think this most recent episode certainly is, illustrative of the fact that I don't think in the short term we're going to see Treasury yields go near there. Also, I would say the Fed wants some steepness in the yield curve. The Fed wants inflation expectations up. So what they really want is real yields lower, not nominal yields so low. Obviously, they don't want nominal yields that high, but I think right now they're kind of in the sweet spot from the Fed's perspective.
Eric, I want to go back to something you were talking about, that Chinese bonds are a haven investment increasingly. And you're not alone in thinking this. BlackRock recently came out saying that this was a good diversifier. And you've seen that second biggest bond market in the world now owned by 9% foreign ownership, which is a record. How safe is this? I mean, are you basically investing in the renminbi? Are you investing in clipping the coupon with a dollar hedged basis? How does this work?
Yeah, I mean, you could do it either way. You could not hedge and take the renminbi risk, or you could hedge, get a lower yield, and take out that currency risk. I do think it's a good diversifier from the perspective of, if you go back to 2018, we saw a sell-off, globally in bond markets, though the Chinese economy was weakening, especially as the trade war was ramping up, and Chinese government bond yields rallied. And then you go to 2019, and actually China was doing better. Their yields were going up as global bond yields were going down. So I think you get some diversification benefit. It can go both ways. I mean, if you look at, what's happened, frankly, since the pandemic, yields on Chinese government bonds have backed up significantly, while, we're talking about U.S. government bond yields at 65 bips on the 10-year and negative 50 basis points in Germany.
So, Eric, the other question here is, how much is this a bet that the PBOC, the People's Bank of China, will continue to offer enough stimulus to suppress yields there even as growth accelerates?
No, fair point. And I think part of the reason yields have gone up in China is that from a relative perspective, the PBOC hasn't been as stimulative as many of the other global central banks. But back to your previous question, if you're a U.S. dollar-based investor investing in local Chinese bonds in RMB, to the extent they're a little tighter from a monetary perspective, you don't get yields coming down. Maybe yields go up a little bit, but you get a stronger RMB relative to the dollar. So from a dollar-based investment perspective, you're actually better off with the currency component.
On radio and television, Eric Stein with us with Eaton Vance. I misspoke earlier, of course. I'm Mr. Dozier. That was Dozier Gardner, who was one of the great founders of Eaton Vance years ago. Eric Stein, I really want to get back to the balanced idea and the courage to have tech ownership at Eaton Vance. Are the big tech companies still a conservative Eaton Vance-like value play?
Well, for specific questions on that, I'll defer to our growth team. We got a great
nobody's watching. Come on, Eric.
But I'll jump in there. I'll say, look,
Please.
I think Eaton Vance, I think we have certainly conservative investments. We also have, other investments for more growth-oriented investors. I think when you break down the equity market, you're exactly right that you can almost bifurcate it between tech stocks and everything else. But I think again from a balanced diversification perspective, tech and growth continue to outperform. At some point, we'll get a cyclical rotation in the economy, and you'll see EM equities and other parts of the U.S. equity market that are more sensitive to cyclicals, pick up relative to tech. But tech certainly has the place to be, in the past.
Well, let's pull it back to your world. Is dividend growth a yield alternative?
So I do think, from a broad perspective, with government bond yields as low as we've been talking about throughout most of this conversation, that having income from stocks is going to be a good place. Another alternative to get income as opposed to just from bonds. And so I do think when you pull base rates globally to zero, investors need income. There's still this generational demand for income, and so I think that's certainly also a good place to be.
Eric, great to catch up today. Appreciate your time. Send our best to the team, please. Eric Stein of Eaton Vance, the co-director of Global Income. I thought Eric had something to say there at the end, but clearly they cut his mic.
That's okay.
I was giving him a second. Just kill him. Just kill his mic.
It's okay.
Let's get to the markets. Let's do that quick. Futures down 4 on the S&P 500.
Well, John, you okay?
One thing we haven't talked about today, guys. I'm okay. I'm okay.
Yeah, good.
One thing we haven't talked about today, guys, the fiscal plan down in D.C.
Yes,
I think
it's really important to try and understand. I want to try and understand whether either side actually wants a deal or whether they are trying to position themselves to the electorate to say that we are not the obstacle to a deal? Because I find it really strange that both sides are saying we want to talk when the Republicans have passed a bill for $650 billion, or at least tried to pass a bill for $650.
Yeah.
The Democrats are looking at 2.2, and the administration is somewhere in between. Does that mean we get a deal, Tom Keene?
I read about it carefully this morning. Of course, folks, this all came up late last evening, and Mnuchin and Pelosi scheduled to speak today. John Farrell, what's so important to me is the power game here, and that I get the Republicans, maybe they have a power selection, but for the Democrats, it's clear as day. They have Democrats in tough House races that are begging the Speaker to do something.
Yes.
To me, that's the distinction right now.
So, Tom, that's what I'm getting at. And Lisa, weigh in, please. Is this a party that actually wants a deal, or a party that wants to be seen to be trying to make a deal so that they can go to the electorate in a couple of weeks' time and say, look, we're trying?
Well, look, they clearly want that, right? I mean, that's why they're having a vote, even though they don't have any Republican support. So clearly, this is a move to say we have a deal that we want passed through, and it's the Republicans that are the obstacle. The question is, how realistic is it, and where is President Trump going to weigh in on this? Because he's come out and said that he would be okay with the $1.1 trillion deal, which is bigger than the skinny deal, right? Will he concede to a little bit more in order to support the economy ahead of the election, John? I think it's a fair point. I mean, I do think that the chances have gone up a little bit if you read the analyst papers, but you're right. It is a political stunt to some degree.
Well, this matters from a market's perspective, Tom, because if it's just happy talk and it's just about politics, then it's just about politics. Because I've seen some people get excited and start to think about bidding up markets because either side's saying it's a good time to talk to each other. But if they're just playing politics, that shouldn't have any market implication whatsoever if we've got to wait until November, December, January, February.
We may hear about it tonight. You may get real promises of plans coming out in January, February. If I'm elected, free beer is a basic idea. But the other, as John, as Lisa mentioned when we were off camera, the urgency here across this nation to get this fixed now is dramatically heightened in the last 2 weeks.
Yeah, we can throw in the UK and the whole of Europe into the mix there, Tom. It's emergency all around the world. Coming up in the next hour, Joe Quinlan and Merrill and Bank of America Private Bank from New York and London. This is Bloomberg Surveillance. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Tonight in Cleveland, President Trump and Joe Biden face off in the first presidential debate. Only a tiny fraction of voters say the debate is likely to change their minds. In a new poll from Monmouth University, 87% say they are not likely to be swayed by the debate. Only 3% say it's very likely. The global death toll from the coronavirus has now climbed over 1 million, but a researcher at the University of Melbourne says actual fatalities could be almost double that. He says the virus's ability to transmit in people who show no sign of the disease have enabled it to outrun measures to accurately quantify cases. And a wildfire in Northern California's wine country has now more than tripled in size. The blaze has forced thousands of evacuations, and it's threatening properties in a region devastated by fires just 3 years ago. The fire is located north of San Francisco. It's burned more than 36,000 acres. And the UK could be facing a substantial tax increase because of the coronavirus. That's according to the Institute for Fiscal Studies. The influential research group says it's highly plausible that government spending will make up about 45% of GDP by the middle of the decade. It hasn't been that high since the 70s. And in hockey, the Tampa Bay Lightning won its second Stanley Cup last night. The Lightning beat the Dallas Stars 2-0 to win the best of 7 series 4 games to 2. Tampa Bay defenseman Victor Hedman was named the most valuable player of the playoffs. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
Some things you see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
The impact of the pandemic is still being felt across the euro area. People are losing jobs, people are losing income, businesses are facing difficulties, and prospects about the future remains uncertain.
ECB President Christine Lagarde there on the difficulty Europe faces and the whole of the global economy. From New York and London, good morning to you all. Alongside Tom Keane and Lisa Abramowitz, I'm Jonathan Ferro. This is Bloomberg Surveillance Live on Bloomberg TV and radio. And here's the price action. Cross-asset worldwide futures, -5, -4. We're down on the S&P 500 by a little more than 1/10%. In foreign exchange, said it all morning. Euro stronger, dollar weaker, euro-dollar just north of 117. And there's the Treasury market in action. Yields going nowhere, unchanged, 0.65% on a US 10-year. That's the price action. Here's the depressing story for cities right now, Tom Keane. Here's a stat in the Wall Street Journal this morning. Let me just read it to you all. Overall, about 10% of Manhattan office workers were back as of September 18th. This is according to a commercial real estate services firm, CBRE Group. But, Tom, that number, 10%.
Right.
10%. And the hopes that it would ramp up into year-end, I think those hopes have taken a hit over the last couple of weeks.
And the surveillance anecdotes are there. Kevin Cirilli in Cleveland for the debates, making real clear Cleveland seems to be very empty as well as they struggle in Ohio with the pandemic. Right now, to drive the conversation forward from Christine Lagarde, Elena Shiloteva joins us with Bloomberg Economics. She is our senior U.S. economist, but far more has a global scale, and it helps with her finance excellence as a CFA. Elena, wonderful to have you with us this morning. I'm really taken by what Christine Lagarde said about people are losing income. It's just about aggregate demand, isn't it?
Absolutely. I think what happened early in the pandemic is that the fiscal stimulus provided a little bit of a cushion, not a little bit, quite a lot of a cushion, and we are still seeing the impact of that. So that's why we had a rebound in jobs. That's why things are not looking as bad as we thought. But this is all waning now, and we are going to start seeing some income losses. Actually, this week there will be a personal income report released, and we will see a decline in personal income. So that means that the economy will slow down into into the fourth quarter, and the economy will slow down into the next year.
The consumer is 69-70% of the American pie, and you can take that across the world in different percentages as well. But Elena, you know the dynamic is in business investment. What's the state of business confidence that you see in America now?
Well, I think that's the sector that is rebounding just simply because there is not enough inventory there. But I think that that will be one of the laggards. The consumer is coming back. Well, whether it's slow or not, we can debate about that. But I think the business sector will be lagging behind just simply because there's so much uncertainty about economic outlook, and usually what drives investment into businesses is some certainty about what is going to happen. Maybe we'll get some clarity after the election.
All right, not to be Debbie Downer, but after hearing John and Tom talking about how things are turning down, I have to go there. I mean, honestly, we're looking at the potential for a second wave that's increasing. It already is there in many parts of Europe and, frankly, even in the U.S., frankly, even in neighborhoods in New York City. And Natixis recently put out a report showing how much the unemployment rate could increase if we do get a serious double dip in the virus cases. Forget economically. How much do you forecast unemployment to rise back up again if we do get a material second wave?
Well, it will depend on how many businesses close down, right? So right now, as you guys were mentioning, things are not there as they used to be. I live in Long Island, and I ride a Long Island Railroad train usually. They're empty. People are not coming back. And frankly, workers, employees at large companies are benefiting from the situation, whereas smaller companies will have to fire workers. So with the waning, PPP funds, we will see layoffs probably next month. And we could see the unemployment rate going up in case of a double dip.
So we talk about the $2.2 trillion plan that House Democrats have put out. Let's talk about the urgency factor, because we talk about it here, and yet when you look at the economic data, it's continuing to come out in a more sanguine way than perhaps some people are portraying it. How long-lasting can that be? In other words, the fact that we have seen household balance sheets improve, how long do we have till that's over?
I think it's urgent now. The time is of the essence, even though we don't see it in economic data. Well, probably the September payrolls report will be sanguine in the sense that we might see another positive for the months of September. But as of October, we will start seeing negative prints, I think. And a lot of other statistics are showing that the length of unemployment is rising significantly. By September, the employment report of September, we will have a lot of people who are long-term unemployed. 26 weeks is already a long-term unemployment by BLS standards. So that means people are not getting paid, they are not going to spend the money, and we will see a slowdown in economic growth already, even though, we will need some fiscal funds, but we are already in a slowdown.
Yelena, it's great to catch up. Some depressing stats there, though. Yelena Shuletseva there of Bloomberg Economics. Good to see you, Yelena. Thank you very much. Tom Keene, let's talk about what's happened here. We had an unemployment shock without the corresponding income shock you would typically expect, largely, almost exclusively, because fiscal stepped up in an unprecedented way. And what Yelena is describing there is more pain ahead, potentially for the labour market, but this time with the income shock, because the fiscal bridge won't be there this time in the same way. That's not just a story for the United States, potentially, but it's a story we're living through right now in the United Kingdom and elsewhere in Europe.
And the dynamics here, the parsing of it, John, are tangible, and that is in one of our conversations, I'm going to say 4 or 5 days ago, we're seeing the unemployment rate of educated Americans moving up out above where it was in 07, 08, 09 as well. So it's a different kind of American unemployment than what we saw in the financial crisis.
Ahead of payrolls Friday, the data just a couple of days away. And Lisa Abramowitz, we go back to the perennial question for policymakers, not just in the United States, but worldwide. What do you do if things get worse? We all hope they get better. The central banks are trying to communicate what will happen if things get better. We won't do anything. What happens if they get worse? Now, the Federal Reserve, some people might say they're done. But this is a conversation that it is really embracing the ECB and the Governing Council right now going into year end. What do they do next?
Honestly, John, it seems like central bankers have done what they can do. I mean, let's say they buy more corporate bonds. Really? Will that actually help get people more jobs at this point? If you talk to most people and they're honest about it, they say it has a diminishing effect on the labor market, and ultimately it has to come from fiscal. So the question is whether that will be enough urgency to get some action. And how much pain do we have to have until we get to that point?
Yeah. And just for the record, Lisa the Bear Abramowitz blaming Tom Keene and myself for being downbeat.
Lisa the Bear Abramowitz? Come on, John. Come on. Tom was talking about walking down the street, you know, no stores open. His local bar closed.
That's basically the top end of Madison Avenue for the last 10 years or so. Alongside Tom
I've
Keene
been
and Lisa
south.
Abramowitz.
I got down to 59th Street.
Jonathan
Leave me
Ferro.
alone.
Wow. Congratulations. Coming up.
Lisa.
Joe Quinlan,
2022, Brooklyn
Bank. There's a lot to discuss. We'll have some therapy in a commercial break.
Yeah, Lisa.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Juicy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
worst case scenario is a double-dip recession. It's not our base case, but it's a worst case scenario.
We're probably getting towards the lower end of this sort of correction phase.
Investors who are expressing their views are starting to show more bearish sentiment.
Rates may never rise. That's entirely possible.
We know there are millions unemployed, but the unemployment stats are everywhere.
September has been a month of consolidation, and I think October will be the same. It's going to be bumpy.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. The View in New York City for Bloomberg Television, for Bloomberg Radio. We say good morning across this nation. All eyes on Cleveland, Ohio. And John Farrow, I don't know your vast history of Cleveland, Ohio, besides the best football team on the planet, but this debate tonight will be a battle. It's going to be interesting to see just John Farrow in the first 10 minutes to see how the debate begins.
And my association with Cleveland is LeBron James. Did I do that right?
Yeah, you did that. You nailed that.
I don't know how good your basketball knowledge is. I imagine it's not that great and mine is better. We can explore that another time. Look, Tom, for the markets, I'm not sure what the implications, the consequences actually are. I think it's intriguing that for many people, the near-term risk, and I emphasise and stress near-term risk, the number one, is that we don't have an outcome November 4th. So if we get a clear lead and Joe Biden really solidifies that in a debate tonight, is that risk on? Do you fade the volatility off the back of that without really considering the policy implications of a Democratic sweep? Now, Tom, I think that might be a step too far, but I am trying to work through those issues with a series of guests, and we continue to do that through the next 24 hours.
Well, we're going to do it on economics, finance, politics, and, of course, this evening in Cleveland, our Kevin Cirilli in Cleveland getting ready for the debate. And, Lisa, I think in the last hour you really underscored this quiet movement into Q4 of a slowing American economy. We see that in Jobs Day on Friday.
And how do you look at that slowing U.S. economy, frankly, the slowing global economy, and the lack of action in Washington, D.C., the lack of the ability of the Federal Reserve to actually stimulate here? And you can see this nervousness not in actual price action, Tom, but if you look under the surface in options activity, you can see that the bets, the short bets, for example, on the NASDAQ surging to the most since 2016 on a net basis. People not necessarily hedging with cash. They're hedging in those derivatives markets, and you can see that nervousness.
Quiet markets right now. Futures -7, Dow futures -47. The VIX backs up, not a point, 26.92. Just quiescence throughout. John, it's not going to be quiet in this hour. Joe Quinlan's going to join us in a moment. But you get lucky with your scheduling sometimes, John Farrow, and to have Bob Woodward with us later in this hour. The book is Rage, but we're really going to focus on Trump and all the allusions back to Richard Nixon from another time and place. To have Bob Woodward with us here in a bit is great. And, John, that really speaks to the political tension folded into what Kevin Cirilli says is the number one issue for Americans, and that's their economic well-being.
Exactly, their economic well-being, and that's the issue that matters. And I just wonder, Tom, we explored this just yesterday, let's explore it again, whether books like this actually matter over the longer term. They come out, they drop, a lot of fanfare, people use the word bombshell a lot, and then a week later it's what book? And then another one comes out, it never sticks. And what's been amazing over the last couple of months, and many pundits have said it, the political analysts are all saying it, the stability of the polling, Tom, has been remarkable. What shakes that up? Can this debate shake that up? I think that's a big question.
Well, Hamid Yunus with us with Gallup polls. Stunning to see the 42% leveling there for Mr. Trump, even as he's challenged in a number of the battleground states. Right now, we start strong in this hour. Joseph Quinlan with us with Maryland Bank of America Private Bank, and, of course, looking at the market strategy of the moment. Joe Quinlan, what is your published strategy right now?
I mean, Tom, it is to expect this period of consolidation and volatility in September and October. But on down days, and there's opportunities, we're still out there buying the life science companies, some of these smaller cap tech companies, the infrastructure plays in and around 5G, e-commerce, electrical vehicles. So we're still buyers because we do expect on the other side of the election, we're going to get this fiscal stimulus. We're going to get this package that the markets are pining for. So we're selectively buying amongst this period of consolidation and volatility.
So, Joe, if that's the case, why don't I get the sense that you're piling into the more cyclical parts of this market?
We will, John, we are, because we do see the synchronized global expansion. The numbers out of China are better. And we know that's engineered, of course, by the Chinese, but it has a ripple effects in the commodity markets. Europe is doing its part of we got to deal with Brexit. And as I said here in the United States, fiscal policy is going to be what monetary policy was in the last 10 years. It's going to be the backstop. And I think the markets are pining for that. And the politicians will deliver. They have thus far. So, we're more cyclical bent as we head into 21.
Joe, you're a buyer in this turmoil. A buyer with what? With cash holdings that have been sitting on the sidelines? Are you one of those that actually fit into that category?
Cash, but we're also trimming a little bit more on the fixed income. We have been all year. We're underweight the emerging markets. I think they've got some problems to deal with. So, we still have a bias towards the U.S., but it's also balanced with Japan and the life science companies of Europe. But we have taken money out of the emerging markets in the last 12 months and put it to work elsewhere.
How are you hedging, Joe?
Actually, just, we're telling clients, to be investors, not traders. That's kind of our DNA of our client base. And look at the dividend payers. Look through the election. I know there's a lot. The media is talking about we're not going to have a winner, clear winner the next day, but we will have a winner. We have checks and balances. We have a constitution, and we got great corporations behind us. Earnings season
Joe,
Q3 is going to be better.
I've got
than
to jump
expected.
in, Joe. That one always drives me crazy. Forgive me. It's not a personal attack. The media's not talking about it. The market's pricing it. It's in the VIX curve. You can see it, Joe. So you're selling volatility?
We see the volatility, but like we were talking before, the markets, I think, have already priced in to a large degree a Democratic sweep. They've already priced that in. They've come around to that for the last. That's why we had that ugly September. That was part and parcel of that. So I think, I think more of our clients are seeing through the election and want to be on the other side owning good companies.
So then what do we own to take advantage of, as John mentions, VIX futures coming in, VIX cash coming in, the general good feeling out there? We have to make choices, Joe Quinlan. What should they be?
Believe it or not, materials, cyclicals, industrial, some of these financials, some of these companies, they're still way down from pre-pandemic levels. And I think they're good core competencies. They got good cash flow. They got the dividends. So it's the cyclical industrial materials side of the equation.
So that's like, I don't mean to interrupt, but Lisa, that's like Amazon, right?
Yeah, that's right. Amazon and everybody other than Amazon, exactly what he's talking about, Joe. Joe, though,
we still like life science companies, technology. There's some space there, but. Look at the infrastructure. When we get a fiscal package, we're going to get a fiscal stimulus package. A lot of that's going to be spent on infrastructure for 5G, for electrical vehicles, for solar. Not talking about bridge and levees. I'm talking about real, 21st century stuff.
So if you like stocks, not such a huge fan of fixed income, what's the 60-40 portfolio for 2020? 70-30, 80-20? Bitcoin?
Well, for your typical, for a young investor, say 35-year-old, it's 70-30. Stocks, fixed income. Obviously, the more you go out on the age curve, you got to pull it in a little bit here. But it depends on your income needs. If you need the yield, you need to be in the dividends. They're kind of the bond proxies. So it depends on where you're at, and your needs and your income desires.
Joe, just to put a bow on it, if we can, and wrap up this conversation, does tonight matter? Does that debate matter from a market's perspective? Do you think it does, Joe, at all?
Yeah, John, I do think it matters. People have been waiting a long time for this to see how the president performs, and also, Joe Biden. So, who gets the upper hand? We'll see. Can Biden stand up to Trump? I think the answer is yes. Can Trump, move the conversation in a constructive way? Yes. So, yeah, it does matter because, as you know, we got these swing states out there. I think the polls are tightening more than they're suggesting otherwise. So it's going to matter to the swing state independent voter. Yes.
Hey, Joe, great to catch up. Appreciate it. Come back soon, please. Joe Quinlan there, Merrill and Bank of America Private Bank Head of CIO Market Strategy. Now, what I'm about to say might sound like I'm joking, but I'm deadly serious. Yesterday, I asked Isaac Boltanski of Compass Point, Tom, will they be standing tonight? Can they walk around the stage, and could we see anything like a repeat of what we saw with President Trump and Hillary Clinton, where they almost followed each other around and around?
This is the strategy of the president. I'm not sure Secretary Clinton was following him around, but It'll be interesting to see the body language. I will say, John, that I'm not an expert on this, but the number of debates I've seen, it's hugely dependent on who the moderators are. And as Kevin Cirilli states, Mr. Wallace is deeply experienced in demanding control.
Well, Chris Wallace has said that he won't be chairing this debate, Tom, and fact-checking simultaneously. And I think it's important to recognise that in debates, it's up for the two people debating to fact-check each other, isn't it? Isn't that the whole point of the debate?
Yeah, absolutely. Lisa, jump in here because you got way more experience than we do on this. But, I flunked Debate 101 in 7th grade. Lisa was a star of it. But the answer is I totally agree, John. You don't need to fact check. People can listen and make up their own mind.
Listen, the key to tonight is having the best viral moment and avoiding the worst viral moment. Avoiding that moment of both of them following each other around on the stage in a strange way.
John,
that's the issue. Tom.
John, can you imagine her in 7th grade?
We're going to do this. We're going to do this right now.
It's the younger Abramowitz that actually debates semi-professionally.
It's true, actually.
He's
in 7th grade.
She was in 7th grade.
Shout out for
Destined. She was in 7th grade. There were scouts in the stands from the University of Chicago. One of them screamed out, "You nailed it!" when she
scouted her.
She crushed the football player.
Hey, Tom, before we wrap this up, I just want to pick up on a phrase you used a little bit earlier in the conversation, and I wonder if any of the candidates tonight will use it. I don't mean to interrupt. When Tom Keane cuts in with a guest and says, "I don't mean to interrupt," you better be sure he means to interrupt you. Where did that come from, Tom? I don't mean to interrupt.
I can't remember.
Where does that come from?
Some lawyer. I can't remember.
To recollect.
Every guest that comes on, Tom's cutting them off. I don't mean to interrupt, but I do. Coming up, Judy Zano. Coming up a little bit later.
I won't interrupt.
On the debates in Cleveland, Ohio. You know what, Tom? I put money on it. You will. Right here on Bloomberg Surveillance.
With the First Word News, I'm Rishika Gupta. President Trump and Joe Biden go head-to-head for the first time tonight in the opening presidential debate in Cleveland. The president has unwittingly done Biden a big favor. He's lowered expectations for Biden's performance. The president has spent months painting Biden as sleepy, doddering, and senile. That may have lowered the bar for Biden in the eyes of many who haven't seen him since the Democratic convention. House Democrats are making another run at a coronavirus stimulus package. They've released a scaled-back $2.2 trillion proposal to support the U.S. economy. The legislation is designed to move along talks between House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin. If those two can't agree on a deal, the House could vote on its bill this week. And more details coming out from the New York Times investigation of President Trump's taxes and income. The Times says he earned $427 million from his role on the television show The Apprentice. And the paper says the show projected the false image of a successful real estate mogul, which eventually helped him win the White House. The administration calls the Times report a political hit piece. And the Trump administration may impose more sanction on Iran's financial system. Bloomberg's learned the U.S. may target more than a dozen and declare the entire sector off limits. The goal is to cut off Iran's economy from the outside world, except in limited circumstances. Uber is considering whether to buy a ride-hailing joint venture between BMW and Daimler. That could give Uber a boost in market share in Europe and Latin America. Bloomberg's learned that there have been early-stage talks. The challenging market could make it difficult to agree on a price. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Are people afraid of calling you because their own credit ratings might go down if it's known that they have to borrow money from the IMF?
If you're a president of a country in trouble, you better call.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Live coverage of the first presidential debate begins Tuesday night at 8:30 p.m. Eastern Time on Bloomberg Television and on Bloomberg Radio.
Lawyers on both sides to make sure every American vote counts. I would just urge Americans to vote early and mail their ballot early so that there's no controversy that their vote will be counted if they're going to vote absentee.
Congressman French Hill, speaking of Bloomberg surveillance in the last 24 hours from London and New York. Good morning to you all. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro, counting you down to the opening bell. And the opening of that debate a little bit later in Cleveland, Ohio. Price action, 1 hour, 12 minutes out from that opening bell here in New York City. Equity futures, -5, down a little more than 0.1%. In foreign exchange, dollar weakness is the story through G10. You see it captured by euro dollar just north of 117. Your Aussie is where the outperformance is. Risk appetite doing okay. Yields do nothing. That's the story once again this morning. 0.65%. Yields go nowhere. The data picks up in the second half of the week, though. Look out for claims. I think we get an ISM in the mix as well. Payrolls Friday just around the corner. Politics first. Economic data second in the back half of the week, Tom.
John, very quickly here, I know Turkish lira with the military affairs and the challenges of Turkey was very, very weak early, then truly spiked to a strength of 7.78, and it's reversed about 80% of that spike. So we're watching that carefully. And I haven't mentioned this morning. Argentinian peso works out among immense challenges there to 76.06 on the published peso. Jeannie Zeno's with us, Ionia College professor of political science and, of course, a Bloomberg contributor in Cleveland with Kevin Cirilli as well. Jeannie, let me just cut to the chase with your expertise. What will you listen for in the first 5 minutes tonight?
You know, what I'm going to be listening for in particular is, does Joe Biden sort of exceed these expectations that have been so lowered by the president and his team? And of course, does the president make a case that he is working in the best interest of the American public and best situated to move us through this pandemic? We've hit 1 million deaths in the world, the United States still leading. And can he hold steady in terms of getting us to where we need to be vis-a-vis the economy? I think those are the two big things. I think healthcare is going to be the major thing I'm listening for. And of course, there's going to be a lot of talk, I expect, about taxes.
But, Gene, this is really important. And Vice President Biden, I believe the language is from Scranton to Park Avenue. How does the gentleman from Park Avenue and Mar-a-Lago, how does he finesse this in an open environment, not an aircraft hangar, but in an open environment in a battleground state?
Yeah, it's the president's got an uphill battle. This is not the story he wanted. And I think we've heard, as you mentioned, Joe Biden's going to be making the case. This is a Park Avenue guy. And this New York Times story cements that, right? He's only paid $750 in taxes in 1 year. He is not the guy he told you he was. He is not the businessman he told you he was. He is not the person to lead the country. And I think the president, he's not going to lose supporters. So I think the real question here is, can he pull over these undecided voters? And there are very, very few of them, only about 5%, according to the polls.
Is Joe Biden a good debater?
He is not a bad debater, and I think he's been undersold. In the primary debates, let's not forget, he was debating, 10, 15 people at once, and that's difficult. Lisa, I know you're a debate star. That's difficult to do.
Okay. She is. No, hold on. Whoa. Let's just hold on. I need to set the record straight. I am not a debate star. Yes, my son is very much into debate. I do know, though, Jeannie, that it is the job of the debater, not necessarily the moderator, to fact check. And John was right on that point. Do you think that Joe Biden has the chops, based on his history, to fact check, to deal with, anything that President Trump may come up with, which can be different, perhaps, than other types of debates, as well as some others?
If I was advising Biden, I would say do not actually fact check. And I agree, traditionally, that's what happens. But Donald Trump has a very good way of getting his opponents off track and off kilter. And I think if Biden tries to go down that path in a 90-minute debate, I think he's going to get himself in trouble. I think Biden needs to focus like a laser beam: COVID, the economy, healthcare. That's what he needs to talk about. He needs to be empathetic and show that he is a different potential president than President Trump. I think if he tries to fact check, particularly if the president starts talking about his son or his family and gets him in sort of emotional responses, that's not going to be good for Joe Biden. And you mentioned earlier, we know from the research now, this is not as much about what happens tonight as what happens afterwards in these viral minutes. That's what decides voters' views as to how this thing went. He's got to watch out for having a bad viral minute.
Gene, you're too young to remember this, but you used to go in the voting booth and your father would pick you up and you'd pull the little toggly things, even though your father knew the whole thing was rigged. What is going to be the difference in this debate, given that it is a mail-in voting, including voting happening now across the nation? How will that change the dynamic?
It absolutely changes it. Let's remember, by the second debate, many people in swing states will have had the chance to vote already. So the teams have to be cognizant of this, and it does change it. People are making decisions already and in the process of doing that. And so the campaigns have to target for people voting at this point. And you're right, we don't know what the actual numbers of people will be voting by mail as opposed to the traditional voting in person. We expect there'll be a lot more, given that we're in a pandemic.
Ginny, just a final question from me. How does the former vice president handle the Hunter Biden question? Because our experience of seeing him being asked that question, I can't think of a single time that he's really adequately handled it and handled it well. There is no doubt in my mind that comes up later this evening. What's the best way of handling it?
I think the best way of handling it is saying, he's my son. I love my son. I love my family. This is not about me or my family. It's about the American public. And I can do a better job than you, Mr. President, in terms of handling this deadly pandemic and everything that's to follow. I don't think he should get into a back and forth about family.
Ginny, great to catch up with you. Ginny Zeno there, Iona College professor of political science and, of course, a Bloomberg contributor. Looking at the markets, equity futures, -4, down a little more than 1/10%. No drama. Outside of that in the bond market, nothing a snooze. Treasury yields going absolutely nowhere. And in foreign exchange, what do we have for you? We have a weaker dollar, a stronger euro. Euro dollar just north of 117. Once we get past this debate, Tom, we clear the way later this week for the economic data. And the economic data is important. Payrolls Friday is important. We need to understand the degree to which the economy and the recovery has lost momentum. We'll get a snapshot of that a little bit later this week.
Yeah, I'm going to emphasize this. I talked to Michael McKee about this, and he really focused on the continuing mystery, which is Thursday claims. John, this isn't about just the jobs report on Friday, early in October, end of Q3, and all that. To me, it is again about claims, and when they come out, McKee gives us his expertise, and it's a mystery.
Claims is a mystery. Unemployment set to come into the low 8s at 8.2%. That's the median estimate. Tom, 850k positive on payrolls is the median estimate right now. Though that has been all over the place and the range continues to be wide. The previous number, 1.37 million. And Lisa, can I just throw this out there? Stop playing it down. Just stop playing it down.
What?
You were a great debater.
Oh, my
We've
God.
seen the videos.
What?
We've seen it on VHS. You were a great debater.
I'll have
just
what Tom is drinking. I'll have one of those.
Paragraphs of Shakespeare. Paragraphs
I'm
of
surprised you lasted
Shakespeare.
this long. I started drinking what Tom was drinking about 2 weeks into doing this show with him. Coming up tonight on Bloomberg TV and radio. Special coverage of that first presidential debate.
It's very
with
peaty.
Bloomberg's David Weston. Yeah. And this is Bloomberg.
De esta manera me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos.
Y estábamos viviendo en dos casas, en una 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas.
Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración.
Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esa enfermedad yo perdí todo, perdí mi trabajo.
Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
There is no change in policy, but there is a lot to unpack in this Fed statement.
My sense is that more fiscal support is likely to be needed.
You saw definite signs of slowing. Do you still see that?
The amount of pain we're going to have in the economy and the challenges we face to get to a full, robust recovery are just going to be much greater.
From New York and London, this is Bloomberg Surveillance for our audience worldwide, live on Bloomberg TV and radio, alongside Tom Keane and Lisa Abravitz. I'm Jonathan Ferro. Around about 60 minutes out from the opening bell, your price action this Tuesday shaping up as follows on equity futures. All over the place, bit choppy, basically unchanged though on the S&P, negative 0.1%. In the bond market, nothing. 0.65% is your yield on a 10-year. In foreign exchange, a little bit of price action there. Dollar weaker. Seen that in the last 24 hours. Euro dollar starting to push forward again. No idea why. 117 handle, 117.08, firmer by 1/3%. And crude comes in 0.7%, $40.30. I think it's fair to say a holding pattern here, Tom.
Yeah.
Wait and see what we get a little bit later on the political side of things.
Well, the political side as well, but frankly, I'll take it into the jobs report and any indications that we're getting the vaunted Q4 slowdown. Every house is published on this, of course. The idea of down big and then up big. And then now what? Neil Shearing joins us with Capital Economics, their group chief economist right now. What is the call for Q4, Neil? Just cut to the chase. Do you need more information or can you make an informed speculation about the fourth quarter right now?
Well, I think the one thing we can be pretty clear on at this stage is that the pace of recovery is going to slow in Q4 versus Q3. Obviously, it's important to distinguish between levels and growth rates. The other point I think that gets lost in a lot of the commentary and discussion is the fact that the US, when you take a step back and look at how the US has performed relative to the rest of the world, it's had a pretty good recovery so far. It's been as bad as V-shaped as you could hope. Our estimates suggest that at the moment, GDP is about 4% below where it was in February. You compare that with the UK, it's about 7%, similar numbers in France and Spain too. So it's only really China that's done a better job of coming out of this than the US. But I think the easy wins have been had, if you like, by this stage, and I think the recovery is going to get more difficult from here.
Neil Shearing, we've just gotten out the trade balance numbers, and it is a distressing vector of an ever large trade balance. That's on the back end of the GDP equation. When you look at net exports and you attract those imports coming into America, how do they affect not only the U.S. dynamic, but the global trade dynamic?
Well, there's a big question, and we could spend all day debating it. There's probably a couple of points to worth thinking about. The first is that a lot of those imports will be goods of things like PPE, personal protective equipment, medical equipment, home working equipment too. And it's not just the US that's been importing that. The same is true of most European economies as well. So what you've seen is that you've seen a surge in imports in both the US and Europe of these goods, and trade balances deteriorate. Guess who produces those? China. So you've seen this big increase, the corresponding increase in exports from China. So China's trade balance has rebounded into quite substantial surplus following the pandemic, whereas the deficit in the US has blown out and in some European countries too. Now, to some extent, like I say, that just reflects consumption patterns in the immediate wake of the pandemic and the need to purchase PPE equipment, home working equipment, and so on and so forth. But of course, this is all reminiscent of the debate around global imbalances that we had in the run-up to the 2008 crisis.
Well, Neil, let's talk about the permanent shifts around the trade story and globalisation. I had the benefit of a late breakfast yesterday with your most recent note, and the title read as follows: How COVID-19 has stopped the march of globalisation. Walk us through it, Neil.
Well, apart from being good breakfast reading, the essence of the argument really is that the twin pillars on which the wave of globalisation that turbocharged world growth following the Cold War were already starting to weaken. Before the pandemic. Those pillars were policy and politics on the one hand and technology on the other. Those were fraying. The pandemic really has just exacerbated the strains that were undermining those pillars. So I think there's two elements to that really. The first is that China has found itself almost as a united front against Beijing across Western capitals now. both because of its failure to contain the virus itself, but also its actions since then too, including in Hong Kong. But also the nature of the recovery, as we were just talking about, I think feeds into and will exacerbate some of the strains in the global trading system and the pushback against globalization. In particular, the fact that China has led the recovery and the nature of its recovery has been unbalanced insofar as its trade surplus has rebounded and it's not really done anything to lift other economies. You add into the fact that a lot of the focus of Chinese stimulus has been on things like next generation technologies, 5G, AI, electric vehicles and so on and so forth. And that feeds this narrative that China is now a technological rival to the US and others. Put all that together, it's a pretty combustible mix, I think. And it's too soon to really judge what the economic legacy of this pandemic is going to be. But I suspect that when the history books get written, we'll step back and judge this as the moment at which US-China decoupling became inevitable and irreversible, and that globalization, as we know it, began to retreat.
Hard to write those chapters now, Neil, but what you describe is really important, potentially, for markets. At the turn of the last cycle, coming out of the last global recession, China was a growth engine for the world. There was positive spillover, so to speak. They exported some of the good stuff. Not in trade, but you know what I'm getting at, just in terms of growth. Yeah. Neil, I wonder this time around how much of that positive spillover we'll actually get from places like China and how vulnerable economies like Germany might be in the next cycle, the next recovery.
Well, I think that's a good question. Obviously, China's recovery is going to mechanically lift world growth. It will just do that arithmetically because China's a big part of the world economy and it's rebounding. But it's not going to do much to reflate demand in other economies because its recovery has come alongside a rebound in its trade surplus. So I think unlike in 2009, where this huge wave of Chinese stimulus sucked in imports from other countries and helped to reflate growth, that's not going to happen this time around, aside from in a few commodity-producing economies, perhaps. Now, what are the consequences of that? From a market perspective, I think one is likely to be that real interest rates, R*, is going to have to remain at rock-bottom negative levels as far as the eye can see, because it's the only way that we're going to get aggregate demand in developed economies and in deficit countries anywhere back to its kind of pre-crisis norms. So the consequence of this is that policy has to remain extremely supportive, I think, in the US and in Europe. Central banks have to remain extremely supportive. And countries that make the misstep in terms of tightening policy too quickly or withdrawing policy support too fast, I think will be at risk of seeing a full recovery. And I spoke earlier about how the US has led the way so far in the developed world. Well, the news that we're getting in terms of on the stimulus front, I think is perhaps gives us some kind of pause for thought on that.
Neil, the other potential market consequence is inflation. This is something that BlackRock has flagged, this idea that as you repatriate supply chains, that's going to be more expensive and that's going to be passed on, leading to an increase in prices. How much do you buy into that argument?
Well, I don't buy into it insofar as it relates to supply chains. I think if you think about how global supply chains work, there's obviously lots of concern at the start of this pandemic that they would amplify and exacerbate the disruption to activity. Actually, they function pretty well. I think when you cast your mind forward 5 years, if you're in London or in Washington and you're thinking about the need to stockpile, to produce and to have strategically important goods like PPE, medical equipment, all of that type of stuff, I think you just stockpile it. I don't think you start to invest in large amounts of capital to produce it at home. So I think the answer on the supply chain front and the need to have PPE, et cetera, is you stockpile it rather than produce it at home. Where I think you start to potentially get inflation from further down the line is not because of the retreat to globalization. It's because I think that the institutional resolve to tackle inflation, frankly, to bear down on inflation starts to weaken. And obviously we go through big regime shifts over time, and we've just been through 30 years where the prevalent theory and orthodoxy has been to control and bear down on inflation. And I suspect that in a world of low growth, high levels of debt, increasing financial repression, we will move to a world where central banks will become increasingly tolerant and accepting of higher debt, and governments indeed will welcome it because it will help them deal with their public debt burdens, particularly if they can keep a cap on nominal yields. So I'm not suggesting this is around the corner, far from it. I think for the next 2 or 3 years, disinflation is the only game in town. But when you cast your eye to the end of this decade, can we be so sure? I'm not sure that we can, actually, particularly given we're in a world of least worst options, and it strikes me that inflation at 3 or 4%, when you're trying to deal with some of the fiscal costs of the pandemic and indeed the global financial crisis that preceded, is perhaps one of the least worst options.
Neil, before we let you go, the most important question of this conversation, saved till last, can you explain to Tom Keane who Fulham Football Club are? Just explain to him very briefly who they are,
never heard of them,
what they stand for, where they are in the league.
The least you know about them, Tom, the better. And they're a source of constant angst is all you need to know.
Neil Shearing, thank you, sir.
Thank you.
Of Capital Economics.
Reminds you of Richmond.
Bottom of the league, Tom.
Coach Lasso.
Played 3, lost 3.
Bottom of the league.
Sox.
That's called doing a Red Sox. Yeah.
That is called doing a Red Sox. You really like this program with Coach Lasso, don't you? What show is
you're
this?
In it, John.
I still haven't watched it.
No, you're in it.
Who am I in it?
Yeah, I don't know. One of the drunks at the bar, the local bar where they go, and they have it's a pub, excuse me, not a bar. I misspoke there. It's a wonderful effort. It's getting lots of buzz, and it's Jason Sudeikis, I believe it is, and just a great ensemble cast. But John, I'll be honest, and I mean this seriously, folks, with great respect. I can't understand about a third of what Pharaoh says, and I can't understand a third of what they're saying on Ted Lasso.
That explains so much.
I mean it seriously with great respect, but I don't understand what you're saying.
Well,
Did you really just say that? 8:41, this is why we only do this show for about 1 hour and 45 minutes, because the time we get to 8:41 Eastern, you're calling me a drunk at the bar and telling me you can't understand anything I say.
We got a fan letter yesterday, folks, from a wonderful 9-year-old, and we say good morning to her as she listens to us. And yes, it's true. We can't stand each other.
With her head screwed on.
Look at those markets.
She sensed it. She knows. We've been together for years and people still can't figure out whether we actually like each other. I think Tom just confirmed it for everyone.
Oh, they love each other.
Farrow, and I endorse
this message. Last time he came over, Vet Bill bit him.
That doesn't sound right, Tom. You can clear that up later. This is Bloomberg Surveillance.
With the First Word News, I'm Ritika Gupta. Tonight in Cleveland, President Trump and Joe Biden face off in the first presidential debate. Only a tiny fraction of voters say the debate is likely to change their minds. In a new poll from Monmouth University, 87% say they are not likely to be swayed by the debate, and only 3% say it's very likely. The global death toll from the coronavirus has now climbed over 1 million, but a researcher at the University of Melbourne says actual fatalities could be almost double that. He says the virus's ability to transmit in people who show no sign of the disease have enabled it to outrun measures to accurately quantify cases. And a wildfire in Northern California's wine country has now more than tripled in size. The blaze has forced thousands of evacuations, and it's threatening properties in a region devastated by fires just 3 years ago. The fire is located north of San Francisco. It's burned more than 36,000 acres. And in hockey, the Tampa Bay Lightning won its second Stanley Cup last night. The Lightning beat the Dallas Stars 2-0 to win the best of 7 series, 4-2. Tampa Bay defenseman Victor Hedman was named the most valuable player of the playoffs. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Good morning, everyone. Bloomberg Surveillance, Lisa Bramwitz and Tom Keane from New York today. And right now, not on just another day, but on a most important day for this nation's politics. Bob Woodward joins us, of course, with the Washington Post and 19 books across a storied career. Rage is the book. It is wonderful. It is well-deserved. And what I know, Bob Woodward, if you have been out on the interview trail, I saw the Jeff Goldberg interview at the Atlantic and with Mr. Swan over at the Axios in the recent hours. I want to focus today, Bob Woodward, on this historic moment, the debate, and also look back to Richard Nixon and the tapes of another time. As you know, Bob Woodward, Michael Rosenwald can stop you cold. He stopped me cold a year ago with that photograph over the shoulder of Sam Ervin, and there was John Dean testifying at the Watergate hearings. There were tapes then and tapes now. Did you know, as you taped President Trump, that it would have an impact much akin to what we saw from the Watergate hearings?
No, I certainly didn't. And in fact, I was thinking not of releasing the audio. And Jamie Gangel at CNN and my wife, Elsa Walsh, persuaded me no. In this era when people distrust everything, especially the media, Trump's voice is the most recognizable voice in the world, perhaps. Put it out, and then people can hear it for themselves. Even after doing this for 50 years, you learn things about how to communicate. And quite honestly, I didn't realize that at the time. We've now released 38 clips. I think my assistant, Steve Riley, still has 8 hours and 30 minutes in the can. We will release things that might become relevant. For instance, when the Supreme Court case issue came up, who Trump was going to nominate, that he had the opportunity to replace Ruth Bader Ginsburg. We dug into the tapes and found a number of things that were quite relevant that Trump said about his relationship with Mitch McConnell and Trump's very passionate drive to change the federal judiciary.
All right, Bob Woodward, in the final days, not all the president's men, but in the final days, there was a moment where Barbara B. Conable, who you say had puritanical intensity, had to tell Nixon it was over. The Senate Republicans today seem in no way related, whatever anybody's politics, seem to be in no relation to the Barbara Conables and the Howard Bakers of another time. Tell us of your surprise at the action of Senate Republicans in the recent months.
Well, in a way, it's not surprising because they've been supporting the president in some cases quite blindly, and it's almost on automatic pilot. As I quote Jared Kushner in my book, Kushner being the president's son-in-law, effectively, in a practical way, the White House chief of staff. I quote Kushner saying that Trump executed a hostile takeover of the Republican Party, and I think that's exactly what happened. The hostile takeover is, in a political sense, total control. People in the Senate particularly do not want to cross the president and get on his bad side. As we know, if you get on his bad side, he'll tweet about you or say almost anything about anyone. So people are protecting themselves, I think, not just politically, but emotionally. Right. They don't want to go into the arena with Trump.
Bob Woodward, the Republican Party was reportedly dead after the challenges of Richard Nixon. Do the Republicans now risk being the Whigs after the Kansas-Nebraska Act? Do the Republicans after Trump, whether it's one term or 2 terms, do they risk being a party that disappears?
Well, that's what we're going to find out in 30 plus days, the November 3rd election, or at least we're going to get a glimpse of it. Whether we're going to get a final outcome is also in doubt. I don't see one of the things in our business, there's too much predicting and people really don't know the future. My take on what's going to happen November 3rd is anything can happen. Trump can win, Biden can win. There can be total confusion and chaos for not just days, but maybe weeks, or God help us, longer, about who's going to be the next president. And I very much think if you look at this, and this is my analysis of Trump, he has a responsibility, as he once told me in one of my many interviews with him for this book, that the job of the president is to protect the people. He has an obligation to tell the truth. And I think he has a moral responsibility to look out for people. And on this election issue, I mean, it's the core of democracy, voting. He should be up there instead of saying, oh, it's going to be chaos. Who knows when we'll count the votes, how we'll count the vote. It is indeed a mess on the surface, but his job as the president should be to repair the problem, or at least try to come up with some solutions with the Democrats. So, I mean, the idea, I mean, go up to 30,000 feet and look down and realize, my God, we are entering this election period, election day, election month. God knows how long it's going to be, with this, not just uncertainty about who's going to win, but the uncertainty of the process.
Yeah.
It's,
Bob,
it's like taking your car to have it repaired, and you go in to pick it up, and you say, did you check this and that? And I say, oh, no, we didn't. We just kind of do. I mean, it's an unacceptable mess. Sorry.
No, please. One thing, when you talk about the moral obligation of President Trump, there is a question about the moral obligation of journalists. And this was one response to your book. People were saying, if you knew that President Trump understood the danger of COVID, why didn't you get it out there sooner? Have you been surprised by the degree to which President Trump's presidency has put into the limelight the morality of the media and thrown that into question?
Well, look, we should be accountable, but there's no one who's read my book and the details of the reporting process who thinks that I could have put something out, because there was nothing to put out, frankly. I thought Trump was talking about China in February. All the discussion was about China. Tony Fauci, the head of infectious disease for this country for, I guess, the last 40 plus years, was saying at the end of February, people, don't worry about it. Go to the malls, go to the movies, go shopping, go to the gym. As we know, the virus hit us in March as a big surprise. In early March, I was traveling to California and Florida. If I thought somehow Trump knew something about what was going on in this country, I would not have traveled, just personally. Right. But what happened is I asked the larger question, not only what did the president know, when did he know it, but how did he know it? And I discovered in May that there was this key meeting, January 28th, when it was all laid out to Trump. That's what he was talking about in February. But I didn't realize that until May. There is a reporting process. You talk to people, you go back. I was driving to that question.
Mm-hmm. Bob,
why did he say that?
Right. Bob, we'll just on the tapes as well in Rage. Bob Woodward, we have time for one more question. I want you to speak to the Democratic Party experience. They lost with Hillary Clinton the last time around. What is the urgency of Vice President Biden to run to the middle to November 3rd?
Oh, well, that's a great question. He has got the burden of not just the party, but a lot of people feel the burden of the future of the country on his shoulders and head. And the debate performance tonight is going to be key. People are going to look at that very closely, as they should. What happened in 2016, I'm sorry to be too long here, but the Democratic Party, the Republican Party failed to see what was going on in this country. And Donald Trump did in 2016, and he won. When I talked to him about this and went through what he was seeing and what it meant to him, he said, not only did I do it in 2016, I'm going to do it again. We'll see.
We will see. Bob Woodward, thank you so much. I can't say enough, folks, about the immediacy of Rage with the tapes. It begins with Robert O'Brien, and just the first pages are just stunning. Rage, Bob Woodward, of course, of the Washington Post. Lisa, just it's a joy to have Bob on here on this day of this debate. Lisa, your thoughts on tonight's debate?
The key question to me is who has the most to lose? And it seems like Joe Biden potentially, you could make the same argument for Donald Trump. It's a game changer, Tom, as you've been talking about for the past week.
It's going to be a game changer to the point, folks, I will admit, I'm watching, even though I need the surveillance beauty rest. It's going to be extraordinary. I would suggest we will see an 80 million statistic maybe on the watching it. Be extraordinary. Election 2020, of course, David Weston leading our coverage. Mr. Cirilli in Cleveland with Gina Zaino as well. This is Bloomberg. Good morning.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From New York and London for our audience worldwide, good morning, good morning. The countdown to the Open starts right now. 30 minutes until the opening bow with equity futures going absolutely nowhere. We begin with a big issue. It's debate night in Cleveland, Ohio.
The debate.
This is going to be a big show.
The most important thing is, how does Joe Biden do?
He needs to not be terrible.
The former vice president is clearly in the lead.
Joe Biden is leading Donald Trump by something like 6 to 10 points.
And should be considered the favorite.
Those people have already kind of formed their opinion about Trump.
The debates will matter to those who are really in the middle.
The number of undecided voters is real, but it's small.
Everyone is now fighting for the votes in the middle.
The most important debate since Nixon v. Kennedy.
There will be a lot of fireworks.
It's going to be the most watched debate that we've had in a very long time.
And people will watch it. Will it matter? 3/4 of US voters saying they'll watch tonight's debate, according to a new poll, but only 3% saying the debate is, quote, very likely to influence their vote. 87% saying it's not likely. For more, let's bring in Kevin Cirilli, Bloomberg Chief Washington Correspondent. He joins us from Cleveland, Ohio, where the debate is set to take place. Good morning to you, Kevin.
Good morning. And the pandemic going to be front and center. This is an issue that Democratic presidential nominee Joe Biden has been leading on, and President Trump hoping to make some ground on that particular issue. He was talking about vaccinations just the other day. Take a listen to what he said.
The day the vaccine is approved by the FDA, we'll begin distributing it within 24 hours with hundreds of millions of doses to follow very quickly. We're all set to go. We're all ready, and logistically, we have the military lined up, and some incredible people are just waiting to have it. Over 100 million doses will be available before the end of the year.
Now, while the president looks to make up ground on his handling of the coronavirus, Democrats are also hoping to make up ground on what a President Biden would mean for the economy. This is the one issue where President Trump has consistently outpolled nominee Biden. In contrast to that, there are some new battleground polls out in recent days, including one in Pennsylvania, which has Biden leading President Trump by 10 percentage points, according to a Washington Post ABC News poll.
And Kevin mentioned this yesterday. It's really difficult to read. From a market's perspective, if Joe Biden was a stock, that stock would be riding high, elevated expectations going into earnings season. But from a political perspective, the line I keep hearing is that the bar is low for his performance because the president has dragged the bar all the way down for the former VP. What's your take right now, Kevin?
Well, from the expectations game, this is a Joe Biden who struggled in the Democratic primaries against many of his Democratic rivals, including his running mate, then Senator Kamala Harris. But beyond that, really the focus is going to be on working class voters, which make up the largely number of voters who are undecided. Expect the Supreme Court to come up and Judge Amy Coney Barrett to come up. In particular, the timing of that. Also wrapped into that debate now, the Affordable Care Act. Remember, the Supreme Court is set to take up a monumental health care case on November 10th. And from a geopolitical standpoint, how would each President Trump in his second term and Joe Biden, how would they handle with China? We should note that President Trump is going to be traveling aboard Air Force One with two senators at the front of that debate, Senators Marsha Blackburn of Tennessee and Tom Cotton of Arkansas. We're also just getting word about their post-debate plans. Joe Biden is set to embark on a train tour through Ohio and Pennsylvania to, again, key battleground states if he wants to defeat President Trump come this November.
Hey, Kevin, looking forward to the coverage. Great reporting, as always. Kevin Cirilli there in Cleveland, Ohio. Full coverage coming up later this evening on Bloomberg TV and on Bloomberg Radio with our anchor David Westin out there in Cleveland. Ahead of all of that, 26 minutes out from the opening bell, equity futures barely negative, down 4 points to negative, a little more than 0.1%. We have bounced back in the last 24 hours, though, and Tony Dwyer of Canaccord Genuity is telling investors to position for a continued rebound. He writes the following: while we believe the market should remain volatile ahead of the US election, most of the weakness should already be in the rear-view mirror. We continue to favour the economic recovery areas and believe the economy and market are in the beginning of a long-duration recovery. Pleased to say Tony Dwyer's with us right now. Tony, you've been a great friend of this programme. Great to have you back. Let's talk about later this evening first. For the electorate, the consequences, according to some of the polling, this debate, the consequences won't be large. What does it mean for a market participant watching this evening, Tony? How will you process what you see?
I think the polls are right in this one. I generally don't trust the polls. As a political science major, I don't trust polls. I will tell you that 87% says it doesn't mean anything. And I think people have largely made up their mind. I think the debate, people are looking forward to it more for the entertainment value almost than they are for any kind of policy initiatives that are going to come out. Both candidates have pretty clearly identified what they want to do. The Biden camp has talked exactly about how they want to adjust taxes higher. So I doubt there's anything new coming out of it. And again, John, the market was down 10%. S&P 500 was back to early June levels. The NASDAQ 100 was back to early July levels and gave back all the parabolic gains that we talked about every day. How much is it supposed to go down from peak when you've got a Fed that literally is telling us they're going to print money for years, and we have the beginning of a synchronized global recovery? So the idea that we're going to call every wiggle and jiggle is ridiculous. I think I've proven I'm not great at that. But what I do want to do is take advantage of that kind of weakness like last week when it comes into play.
Tony, you know how this works. It's not how low it's supposed to go down. It's how low people want it to go down so they can reset March 23rd and get in when they should have. Tony, human beings are wired to worry about downside risks, threats. That's just human nature. For a market participant, I think over the last 10 years, it's been much more difficult to recognise the upside risk, the opportunity. Looking out to year end, it's pretty clear that volatility is elevated. Around one reason from discussions we have on programmes like this with market participants, the prospect of not having a result on the morning of November 4th. And if you just break that down, Tony, and reverse engineer it a little bit, it seems to me that all market participants want is a result, regardless of who the winner is. They just want someone to be there November 4th. Waving their hands at a crowd. Now, Tony, I wonder if that's short-sighted, because what ultimately matters over the medium and the long term is to work out the composition of Congress and do some proper policy analysis. Is any of that happening right now, Tony?
I think that's important, John, but I would argue that the real thing you want to look at over the medium to long term is, do you have money availability? So the politics is very important. Of course, it's important. Everybody writes so much about it. But it ultimately comes down to, do you have money or not? And if you have money, you can grow the economy and the households. And we have a historic amount of excess liquidity or readily available money. I think that is much more important than trying to guess. John, like you said, it's an absolute unadulterated guess. We don't even know how we're going to vote yet exactly in each state. We don't know who's going to win. We don't know if it's going to be a Democratic sweep. And we don't know when we'll actually get the results. How could you possibly make an investment decision? So our game plan since early August has been, we think that the market is going to stair-step higher. Similar to the fall of 2009, after the market went up 50% off of that incredible low, just like this last March low, after that 50% move, people were saying insiders are selling, it's too far too fast, the valuations, all the stuff you're hearing today. But what was interesting is you stair-stepped higher. You had 4 corrections over about a month and a half into the fall. That's what we're getting. 10% was a little bit more than I was looking for. I thought it'd be anywhere between 3 and 7%. Yeah, it's part of algorithms, but the bottom line is we expect that kind of choppiness. So I'd rather buy last week, which is what we're talking about, than chase up 4% today. We're going to get opportunities. I think patience will win for great upside risk opportunities in the long term.
Tony, something did change, though, in the last week. Mohamed El-Erian was on the programme, and he talked about those 2 anchors that have really anchored risk assets, one being fiscal policy, now being questioned in the United States, the other being the recovery, which is now being questioned across Europe with new restrictions in big economies like the UK, France, Spain and elsewhere. Tony, how are you processing those 2 things at the moment?
That's the down 10%, John. right? So that's why we're not at a high.
We've had the move. You just think we've had the move?
Well, when you think about a market that goes down, call it 20% or even 34%, which was the case in March. What caused that whoosh lower? Remember, we had downgraded the market in January, and I wasn't saying buy the weakness. And here's why. We didn't even know what COVID-19 was yet. We didn't know how it would impact the economy. We didn't even know during the whoosh lower if you were going to shut down the economy. And then you didn't know how the Fed was going to react. So that's what creates that woof, right? Now, we're in a very different scenario today. We're in a scenario where the Fed has literally told us they're printing money. It's a matter of how much they want to spend fiscally. We know that if you wear a mask, it's better, and we have policies. Every biotech company is working on a vaccine, and pharmaceuticals are working on a solution if you do get it. And we know that the economy crashed globally, but now is in a synchronized recovery. So Mohammed's right, Tony. And we don't have a perfect global economy, but we're not supposed to at this.
Tony, what's your stop? What's the one thing? Everyone has one. What's the one thing that, if it did materialize, you'd change your view?
Fed policy. Full stop. Fed policy. Because if
the only thing that matters, Fed policy.
Well, but think about it, John. And we've been doing this a long time, you and I love coming on the show because it's a great show. And I love interacting with you. But here, in all the times we've done it, and all the different issues that have come about, what drives the market is the perception that the Fed is going to make a mistake and create a credit-driven recession. They literally have vehicles in place to buy corporate debt. They haven't even hardly bought any because they've just said they're willing to and have bought a little bit for credibility. You go into a credit crisis and an economic recession when you have a need for money at the corporate and household level with limited access to it. We have, generally speaking, historic access to it. Like I talked to a bank CEO last week who told me, I can't lend enough. I wish there was better loan demand. Right? That means there's money availability.
Hey, Tony, sometimes it's so simple. I hope it's that simple. It's always great to catch up with you, sir. You look well. Tony Dwyer there on the latest. On the markets right now, equity futures -4 on the S&P 500, down a little more than 0.1%. No drama at the market desk with your movers ahead of the opening bell. It's Kelly Lyons.
Hey, John. Well, I want to kick it off with a virus-related mover, and that is Abbott Labs. Looks set to open higher by about 2% this morning after President Trump made the claim that 150 million of the company's rapid COVID tests will be delivered within weeks, about a third of those earmarked for nursing homes. Then on to Nikola, that stock down by about 3.4% in pre-market trading. Its founder, Trevor Milton, seemingly constantly in the news as of late, now facing a second sexual assault accusation. This stock, John, has lost more than half of its value since the start of September. If this early loss holds, it will open at its lowest since May. And finally, just check out Fitbit. Google offering an improved package of data concessions to the EU in a bid to get regulators to sign off on its $2.1 billion takeover deal. Now, the EU has until December 23rd to make that decision, but clearly Fitbit investors seem optimistic the concessions are going to do the trick. That stock up by nearly 5% before the opening bell, John.
Kelly, thank you. Coming up on the programme, House Democrats releasing a scaled-back stimulus package. We'll get the latest from Terry Haynes of Pangea Policy. That conversation up next. Around the corner, the opening bell 18 minutes away. Futures -4. This is Bloomberg.
The scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Hopefully we can find our common ground. When he's ready to come back to the table, we're ready to have that conversation. But it has to come back with much more money to get the job done.
House Speaker Nancy Pelosi speaking with Treasury Secretary Stephen Mnuchin today after releasing a scaled-back $2.2 trillion virus relief package. Are we looking to make policy here, or is it posturing ahead of an election? What do you mean? What should we do in the market? Here's Bloomberg's Sarah Ponczek. Hey, Sarah.
Hey, John. Well, at least for the past couple of days, we have seen revived hopes for this fiscal 4 package showing up in markets. And sure, it might be difficult to really extrapolate a trend from just a couple days of trading, but it's notable that we have seen a bit of a tone change. This really all begins in the inflation markets. Take a look at inflation expectations. And as Michael Purvis over at Telback & Capital Advisors so succinctly put it, he said fiscal stimulus at this point is central to the trajectory of inflation expectations and therefore real rates. Well, what you're looking at right here, that white line is 5-year break-even inflation expectations. Blue are 10-year. Yellow is 30-year expectations. Well, as we can see, they peaked on August 31st as fiscal expectations did start to fade. Well, since late last week, we have seen them tick higher. And that has since rippled through asset classes across markets, triggering a reversal in some of the trades that we had seen throughout September, that being in the stock market and also in the commodities and FX market. So take a look at stocks. Sure, yes, the major benchmarks are modestly lower this morning. However, we have seen stocks recoup much of their September losses. At the worst point, the NASDAQ was down more than 10% in September. As you can see here, it's since trimmed that loss to just a bit over 6%. Also notable the last couple of days is the fact that cyclical shares, also the Russell 2000 small caps, have led the way higher. But at the same time, we've seen a change in the direction of commodities and FX markets. So if you look at the Bloomberg Dollar Spot Index, for example, also gold, the Bloomberg Dollar Spot Index is in white. Gold is in that orange garnet color, as you can see here. Well, after we had seen the dollar fall, well, that's what we're seeing in recent days. After that rise we had seen earlier in September, the gold has also reversed. So now gold has started to rise once again as we see the dollar come down too, John.
Sarah Ponczek, great work. Thank you. It's really difficult to know what to do with any of this right now. I've spoken to market participants who buy the happy talk. I've spoken to market participants who want to fade the happy talk. Ultimately, we have 3 plans, 3 numbers, and they are very far apart. $2.3 trillion is the number for the Democrats. Sarah was talking about that bill. Senate Republicans at $650 billion. The White House somewhere in the middle at $1.5 trillion. And we've got to try and close the gap. Pangea Policy's Terry Haynes weighing in on the impact of a potential stimulus bill, writing the following. If Democrats feel new pressure to get a bill, that's a powerful political incentive for Republicans not to give them one. So the stimulus prognosis remains market negative. I'm pleased to say that Terry joins us now. Terry, I've been trying to work this out, and you're closer to DC than me, so help me. Is this posturing, or are they looking to make a deal here?
If they can get a deal, they'd love it, but fundamentally it's posturing. It's always important to ask, in politics, just like in life, why somebody is doing something. A couple of weeks ago, Mrs. Pelosi was all about $3.5 trillion and not a penny less, and now she's gone less $1 trillion down. Why is that? The answer is because she's getting pressured from 30 centrists. And remember, the majority in the House is a tiny, rough 15 seats. She's getting pressured from 30 centrists who essentially are telling her, look, we need a stimulus bill or our seats are in jeopardy, and therefore the majority is in jeopardy. So all of a sudden, they're coming, they want to vote on this. So all of a sudden, they're coming down greatly. You have a split Democratic Party as a result, and when you couple that with a split Republican Party, as you've already mentioned in the two different numbers, I'm still at about 10% this gets done. It's not impossible, but it's very unlikely.
And Terry, the other element here is that if the Republicans push forward, and they seem to be pushing forward with a new pick for the Supreme Court, that you won't be able to do the fiscal plan. It's one or the other and not both. Is that still a factor here, Terry? Is that part of the equation?
I don't think so. I think you can, in this case, you can conclude another stimulus bill if you choose, and deal with the Supreme Court nomination at the same time. I don't think that's a disqualifier. But, as I said, and you've highlighted before, I think it's very unlikely that Republicans give Democrats what they want here. If they sense weakness, which they do, the Democratic centrists are telling them that. A lot of polls are telling them that. Then and as long as the economy and the markets keep roaring forward, there's really no incentive to give them what they want. In that context, it's important to understand that, another dynamic here is that Biden's numbers over the last week or so in battlegrounds are starting to deflate substantially. He's now essentially less than a point ahead of where Clinton was at this time in 2016. So, Republicans are going to start smelling blood in the water pretty soon, I think.
Well, let's put some numbers on the word substantial, Terry, because for many people the takeaway has been how stable the polls have been over the last few months. Where are you seeing things start to move?
I'm seeing things firstly in the battlegrounds. There's an average of battlegrounds that the Real Clear Politics site puts forward. Biden's lost 2 points in that battleground over the past week, and one reason I call it deflation. So he's pretty much down to Clinton levels. As well, you see numbers for Trump in Ohio that are very good. You see a lot of battlegrounds sort of coalescing into a tight race, which I think favors Trump because, remember, likely voters are only about 60% of overall adults. And these debates in that context are going to tell you an awful lot because, Vice President Biden fundamentally needs to be affable on top of his game for 2 solid hours, which is something that the vast majority of voters have not seen from him. I am not casting aspersions by saying so. It's just that he hasn't been on very much in the last 6 months. They're going to need to see that in order for him to be a credible alternative, or I think the leakage probably continues.
That's a pretty low bar, though, isn't it, Terry? That all the Vice President has to do is perform for 2 hours. Do you think he's vulnerable anywhere on the content, and if so, where?
Oh, I think they're vulnerable on the content in a lot of ways, most particularly on the economy. For the 8 years of the Obama presidency, the new normal was thought to be somewhere under 3%, and there was no reason to strive for more. And and Trump will tout his economic gains in the first 3 years and frankly tout the good things that have happened in the last 6 months as being reasons for him to be elected. That Ohio poll I mentioned is hardly definitive, but it shows that people are looking much more at the economy and its performance than anything else as we move out of the trough of the coronavirus worry. And that's a concern for them. They've got to show on the Biden side more economic dynamism, and it's very difficult to do so if you're talking about raising taxes across the board at the same time.
Terry, great to catch up. As always, got to get you back on soon. Terry Haynes there of Pangea. Coming up next on this programme, the analyst action you need to know. That'll be next in our morning calls, and later, around the opening bell, the wonderful Mandy Zhu of Credit Suisse. All of that coming up shortly with futures negative 4 or 5 points. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
No drama treading water going into the opening bell. Equity futures are negative, but only down 6. We're off by not even 0.2%. That's the price action. Let's get you some morning calls. First up, Wolf Research upgrading Square to outperform, raising its price target to 195 from 160. The analyst there, Darren Peller, saying the company might benefit from the pandemic and adding that the stock might see a strong holiday rebound. We're up almost 2% there. Cowen upgrading Restoration Hardware to outperform from market perform and raising its price target to 435. The analyst citing optimism around the company's transformation and seeing revenue growth in the long term. Your third and final call from the team at Barclays, raising its price target on Qualcomm to 120 from 110. The analyst saying the market for handsets might be primed for a rebound in 2021. That stock inching higher by 0.4%. Around the opening bow, looking forward to catching up with Credit Suisse's Mandy Zhu on why a Democratic sweep might be the best outcome for risk. That's next. This is Bloomberg.
The Census Bureau has asked Congress for a 120 extension. I don't know that you even have to ask, and I think 120 days isn't nearly enough.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week. Live coverage of the first presidential debate begins Tuesday night at 8:30 p.m. Eastern Time on Bloomberg Television and on Bloomberg Radio.
Nothing to see here. See you at 9 Eastern, apparently. That's the message. Equity futures down 5-6 points, negative a little more than 0.1%. NASDAQ futures, some weight to the tape, down almost 50 points and off by 0.4%. There your equity markets. Switch up the board in the bond market. First half of the week about the politics, second half of the week about the data. Going into that, guess what treasuries are doing? Nothing. 0.65% is your yield on a US 10-year. What will the catalyst be to get us to break out of this range on treasuries? Remarkable. In foreign exchange, weaker dollar the story through the bulk of G10. In fact, all of it through much of this morning. Euro dollar a 117 handle. North of that, we're up 1/3% on that currency pair. And commodities just a little lighter. We shave 1.8% off crude. WTI 39 handle at $39 at around about 90 cents. That's the cross-asset picture this Tuesday at the market desk with your movers. Here's Katie.
Hey, John, well, there's some large caps moving to the downside this morning. Let's take a look at Boeing first. It's up 13% over the past 2 days. Today, opening lower by about 1% ahead of that 737 MAX test flight with the FAA chief tomorrow. On the subject of the FAA, though, House lawmakers unveiling legislation yesterday to tighten its oversight of plane makers like Boeing. And speaking of flying, check out American Air, down 1.5% as we open up here. Remember, the company's CEO has warned it needs more government payroll aid. It thinks it will be renewed, but the expiration date of that first aid package is on Thursday, John, so the clock is ticking. Then NVIDIA reversing just a touch today after being up for 3 consecutive days, its first 3-day winning streak in a month. And then Tesla, John, can't remember the last day I didn't just talk about this stock. It's lower by about 2% now, down 11% over the month of September. Maybe a touch of pessimism today on reports the company is dropping some M&A plans in Nevada. And just to check on the action now that we've opened up for some of the stocks I mentioned earlier this hour, Fitbit now up 5.4%, again, as Google offered more concessions to get that $2 billion deal to go through. Nikola lower by about 4% now, more accusations surrounding its founder. And finally, a new one for you, John, here, McCormick down nearly 3% in the first few minutes of trading. It did beat EPS estimates, but only by a penny, and did not raise its forecast, so that stock in the red as we open, John.
Kelly, thank you. Great work as always. 2 minutes into the session, equities are not doing a lot, down about 0.1% on the S&P 500. Top of the pile, utilities. Bottom of the pile, financials. The FX market a lift on euro dollar once again, 117.15, and treasuries not doing much at all. Looking out to year end, vol is the story into December. Election jitter starting to mount. Big concern for investors. Will we have a result November 4th? Some investors saying sell the volatility.
Everyone is worried about there being uncertainty around elections.
Election risk premium has been very robust for some time.
It's about whether there are a delay of election results.
The narrative about a delayed election outcome.
Risk premiums in options markets today.
Take advantage of it.
Is in some ways one of the richest sources of yield.
Selling options, taking in a premium in this really low yield environment.
Selling some of that fear.
You can earn double-digit annualized yields and get paid to wait.
It's better to be a seller of that premium than a buyer.
Bloomberg's Sarah Ponce joins us now for more. She's back with us. Sarah, huge debate at the moment. 2 views, it makes a market. That's just one view around the volatility into year end.
Well, John, clearly we've heard this one view time and again on Bloomberg programming, and I'll actually go ahead and add one more to that list because Ben Emmons of Medley Global Advisors just last night sent an email to clients with the subject line reading, "Sell the presidential noise." Well, take a look at this premium that they are all talking about. This is in the stock market. Your white line, October VIX futures. Your orange line is November VIX futures, which you can see are trading much higher at that premium as investors hedge a contested election and the possibility that we might wake up on November 4th and not have an election result, and how long that might last. But it's not just showing up in the equity markets. It's also showing up in the FX and rates markets. What you're looking at here, that white line, is your spread between dollar-yen 3-month and 1-month implied volatility. Now, your blue line is the spread between 3-month and 1-month tenors for the Bank of America Move Index. This is essentially a VIX equivalent for the bond market. And you can see these spreads at the highest levels in at least a decade. In the words of Goldman Sachs strategists in a report just last week, they said option markets are already pricing higher variance for 2020 than any recent election. However, they went on to say, while we recognize the tail risk possibilities, we think market participants appear to be somewhat overestimating that probability. So if that is the case, this is all overhyped. We will have a result on November 4th, I should say. Then what typically happens ahead of elections? Well, looking here, you see S&P 500 performance 3 months before an election. Well, typically it's a toss-up, and this year it looks like we are taking the volatile route once again, John.
Sarah, thank you. This is really the question of the moment. Sarah Ponset breaking it down for you. What's the most important thing here in the short term? Who wins, or just that someone wins? Here's the take of Credit Suisse. A Democratic sweep may be the best outcome for risk markets. Mandy Zhu writing the following: the most positive outcome for risk markets is a Democratic sweep, given the potential for significantly higher fiscal stimulus and consequently higher economic growth. Conversely, the most negative outcome is a Biden White House with a split Congress, in which case we see little prospect of further fiscal aid and increased probability of a stalled recovery / prolonged downturn. Luckily enough, we have Mandy with us right now. Mandy, let me ask you the question I asked just a minute ago. What is the most important thing here for near-term risk, for the volatility curve, for the VIX and the way we see it priced into year-end? Who wins, or just that somebody wins?
Hey, John, it's great to be on the show. I would say for the near term, absolutely, it's who wins. You know, the fact that we have a resolution, I think, would be a big positive for markets. But longer term, I do think the biggest risk right now facing market is the potential for a stalled economic recovery, especially with latest economic data coming in showing the momentum already slowing. So I do think from a longer-term perspective, you know, it will matter who's in power and the potential for further fiscal stimulus. But absolutely, I think in the near term, you know, having some clarity around the election would be positive. You know, I think a lot of investors are staying on the sidelines until the election, given kind of how volatile it could be.
Mandy, it's a difficult moment to come on programs like these and talk about who is good for risk and who is bad for risk, because you get viewers, listeners who start to imply what your politics is. And the lesson of the last 4 years was to divorce your politics, if you didn't like the President of the United States, and just focus on the policy. So, Mandy, let's do that right now. You and I focus on the policy. Why would the policy from one party be better for this market than the policies from the other? Can you break that down for me?
I don't think it's necessarily one party versus the other. I think what markets are really looking for is a unified government where one party controls both the White House and Congress, because in that situation, you're much more likely to have decisive fiscal action, right? And I think that's why in 2016, when the Republicans swept, markets actually took it pretty well, and markets liked it because we had fiscal action on the back of that. And that's why I think this time around, obviously the Republicans could sweep again, but based on the current polling, a Democratic sweep is more likely. I think if they do sweep, we're going to have a much higher chance of fiscal stimulus. Keep in mind, the House Democrats already passed a $3 trillion stimulus plan back in May. So if they come in January and pass something very similar, I think that's massively pro-growth. And I think, you know, we're likely to see higher yields on the back of that due to higher inflation and growth expectations, and we'll likely see a stronger rotation into cyclical sectors and an outperformance of cyclical value names over growth. So that's kind of how I would position it on a longer-term horizon.
Mandy, would the outcome be the same with the Republican sweep?
I do think, Republican sweep is, based on current polling, less likely. And I do think, you know, at least based on current Republican rhetoric, the size of the stimulus is unlikely to be as high as under a Democratic sweep scenario. But certainly under a Republican sweep situation, if the economic recovery stalls, then I do think you'll also have high likelihood of some kind of stimulus. I think the really kind of the risk, the adverse outcome for markets is when you have a split government, in which case you have policy paralysis. Now, in a normal election year, I would say markets probably don't care because markets generally like the status quo and dislike change. But I think in this current time, policy paralysis would actually be very negative. So I do think in this situation, what markets are looking for is a unified government and higher chance of fiscal stimulus.
So, Mandy, what you do tremendously well is come on a show like this with me. We catch up. You give me a framework for thinking about the world, and then you put the trade on at the end. So can you help me out with that just a little bit? The VIX curve incredibly elevated. You've mentioned in your note the bid into the December contract. Many people focused on the same thing. Mandy, just think about that for a moment. What is the trade right now? What do you do in an environment like this?
Sure. I think in the near term, as you look at what is currently priced in, I would say, for sure, the base case scenario that is currently priced into the option market is a contested election. And that's why the S&P December vol is the highest point on the entire volatility curve. Now, if you look at how markets historically have reacted in a contested election scenario, granted, we don't really have a lot of examples, but if you look back to the 2000 election, Bush v. Gore, what happened in the aftermath of that election, risk markets did take it badly. S&P sold off 8% in the month after. But if you look at what happened to the VIX didn't really do a whole lot, right? It stayed elevated, didn't come in as you would expect post-election, but it didn't really see a big jump. So I do think for investors who are concerned about a contested election scenario, the better hedge here is not to go long volatility, especially given how much risk premium is already being priced in, but rather to buy protection on the S&P. And you can do it through structures where we're actually net selling some of that expensive December vol. So, for example, a put spread collar. You're selling a call to fund the downside put spread. You get it for roughly zero premium, and it offers pretty decent downside protection. So we do think in that type of scenario, these type of structures line up better than going long volatility, given the parallel from 2000.
Mandy, always smart, and a really thought-provoking note. Appreciate your time today. Mandy Zhu there of Credit Suisse. In the markets, 10, 11 minutes into the session, equities barely positive on the S&P, on the Nasdaq up by around about 0.2%. Back with us at the market desk is Kaylee.
Hey, John. Well, a lot of talk about politics today, but of course there is still a pandemic going on. So let's take a look at some COVID-related stocks moving in the first few minutes of trading. I mentioned Abbott Labs earlier this hour. It's up about 1.4% now. Again, President Trump saying 150 million of their rapid tests will be delivered within the next few weeks. Then we have Sorrento Therapeutics seeing positive results in its preclinical studies for its COVID antibody test. Dual medications producing 100% effectiveness in neutralizing the virus. That isn't in humans, though, John. Right now, they're testing hamsters. Nonetheless, that stock getting bid up to the tune of about 5% this morning. And finally, up about 2% is Inovio. Remember, it had to put a partial hold on its phase 2/3 vaccine study due to questions from the FDA. The stock fell 28% in yesterday's session on that news. A little bit of a rebound taking shape this morning, John.
Kelly Light, thank you very much. Coming up on this programme, China reducing the pace of its purchases of US goods. That conversation is coming up next with Invesco's Rob Waldner. From London and New York, with equities all over the place, down around about 1/10 on the S&P now, the Nasdaq flat. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They move the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Are people afraid of calling you because
their own credit ratings might go down if it's known that they have to borrow money from the IMF.
If you're a president of a country in trouble, you better call.
A mild move lower on the S&P 500 this morning. We're down 0.2% on the Nasdaq as well. Treading water through much of this morning on equities. A choppy road to nowhere as we wait for those debates. Bloomberg reporting Democratic presidential nominee Joe Biden will be focusing on China with his own tough on China policy, writing the following. Biden's campaign advisors say they would prioritize domestic issues like investing in research and development and U.S. manufacturing to compete with Beijing from a position of strength and deal with international matters like trade later. China falling behind on its Phase 1 trade deal promises. Weighing in on that, Howard Ward of Gabelli Funds on the deteriorating relationship with the world's second largest economy.
The China situation with the U.S. is on a bad trend. The tensions with China, the relationship with China seems to deteriorate by the week. I am concerned overall about the rising tension between the United States and China. I think longer term, that's a problem.
Joining us now is Bloomberg's international economics and policy correspondent, Michael McKee. Good morning to you, Mr. McKee. The numbers against the policy, how's it stack up?
Not so great, John. Remember Valentine's Day? There was something going on in China in a place called Wuhan. But the real news of that day was it was the start of the Phase 1 trade agreement with China. Donald Trump getting the Chinese to agree to buy $200 billion worth of additional U.S. goods in 2020 and 2021 over what they'd purchased in 2017. But then came the pandemic and the election, and whatever happened to trade wars? Well, let's start with the deficit itself. The U.S. trade deficit, Donald Trump said he would shrink. Now, this is probably going to come up tonight. Instead, no progress at all. Things have gotten worse. The advanced trade report out just a few moments ago shows the trade deficit at $82.9 billion. That's the worst monthly deficit ever. Imports rose 3.1%. Exports just 2.8%. They're down 13.3% over the past year. Now, we also have not made progress on the deficit with China. We'll get the latest figures next week, but through August, the deficit basically unchanged in Trump's almost 4 years there. The Phase 1 deal hasn't helped at all. The deal allows China's purchase promises to be measured two ways. In Chinese imports, the gold line, and U.S. exports, the white line. Either way, through the first 8 months of the year, China's bought only about half of what it has promised. It bought more than half the manufactured goods it's bought in the agreement, but a lot less of agriculture and energy products. Now, the agreement says it only matters at the end of the year how much they bought. So that means that either China has to pick up their growth a lot, or it's going to fall short.
Michael McKee, I imagine some of those numbers you just discussed will be coming up a little bit later in Cleveland, Ohio. That debate beginning at 9 p.m. Eastern, if you did not know already. Invesco's Rob Walder seeing opportunity in Chinese fixed income despite rising U.S. tensions. He writes the following. One of the few markets where yields are unchanged since the beginning of the year is Chinese fixed income. We're supposed to separate politics from investing, but if looking for yield in a low-yield environment, diversification from Western policymaker mistakes and a degree of safety, the large market is really opening up to foreign investment. I'm pleased to say that Rob joins us now. Rob, it's almost counterintuitive, isn't it? Because we hear what these candidates for the White House have got to say about China, and it doesn't sound favourable for policy, yet I've heard it from Invesco, not just you, Rob, but others as well, leaning into Chinese fixed income. Give us the why, Rob.
Right. Well, John, I think earlier on your program today, too, you've talked about the fact that the trend really here is to deglobalization. So all of this stress that we see between the U.S. and China is really starting to pull these two countries apart further. And this deglobalization will, one of the things that comes out of that will be a diversity of, economic activity. So the less close we're tied together, the more diversification you'll get by investing in the other block, if you like. And so as investors, as you just quoted me, you're supposed to separate, your politics from your investment opportunity. And as you said, Chinese 10-year bonds yield about 3.1%. That might not seem like a lot, but that's kind of unchanged on the year. Whereas, we know the U.S. bond yields have plummeted in the same time. And China is a big domestic fixed income market. They've just opened it up to foreign investors. And there are flows in. And we think it belongs as a piece of an investment portfolio.
What's interesting here, Rob, is just how focused you are on China specifically. Typically, if we talked about a better China, we'd be thinking about the proxies to push that view through. EM, Germany, across Europe as well. Rob, has the character of that trade shifted coming out of this pandemic?
Well, what's so clear coming out of this pandemic, John, is the disparate outcomes within EM. So if you look at portfolio flows to emerging markets, first of all, we had a historic outflow out of EM, and then we haven't had the comeback into EM that you might have expected after after other corrections. But if you look into the details of that, actually Asia has held up remarkably well. So I think Asia performs a little bit more, and China specifically performs a little bit more like a developed market from that perspective. So I think you need to think about emerging markets as not one bucket. And that has been very clear through this COVID crisis, that EMs perform differently, their debt dynamics are different, and the portfolio flows are different, which will lead to different outcomes.
The challenge at the moment, Rob, is the DM trade. What on earth do you do with treasuries? It just used to be a fixture of any portfolio. You had an allocation to treasuries. And Rob, now a remarkable turn in the last 9 months. Pretty much everyone's asking the same question. Should you still have that? If you don't, what do you replace it with? Is it something else, or do you just sit in cash? What is it, Rob?
Well, you asked me this, I think the last time I was on, or one of the times I was on, John, and the fact is the Fed is making making treasuries a very poor investment. Real yields are negative 1% in the 10-year. So you're going to get back less than you invest if you buy into treasuries. So that's very, very expensive insurance, and the top side has been cut off. So to your point, what do you buy? We would submit that Chinese fixed income is actually one of those things that you can buy, where you can get some upside. There are other things you can look at too, a diversified credit portfolio where at least, across investment grade type of assets, where at least you get positive real yields, and some commodities. Or from an investment perspective, one of the things that we really think is a good opportunity for the next period is real assets. So when the Fed, a corollary of putting real yields at negative 1% is that real assets should perform very well.
Rob Wallner, always great to catch up. Of course, that assumption on losses of treasuries depends on capital returns, of course, and given where bunds are right now, who knows? I'm not saying that 10-year yields on a treasury market go negative. I'm just saying that elsewhere they have. For some of the price action, at a sector level, with an equity market not doing a lot, here's Sarah.
John, as I look on my screen at the IMAC function right now, 5 sectors higher, 6 lower at the same time. Not much of a clear message. However, a textbook reversal of what we really saw yesterday. Yesterday, for example, healthcare, utilities at the bottom. Today, they're 2 of the better sectors. And today, financials, energy at the bottom. Back to you, John.
Sarah Ponce, thank you. I think we're frozen on me, which is probably not great for our viewers at home who would much rather have seen what you had to say. Coming up next, your trading diary in the markets right now, 22 minutes into the session. Equities lower by not even 0.1%.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
I'm not even going to pretend it's exciting. It's not. 24 minutes into the session, your equity market doing nothing. In the Treasury market, the curve a little bit flatter. Yields are lower by not even a basis point on a 10-year, down around about a basis point on a 30-year. You do have a bit of price action in foreign exchange. The dollar's weaker, the euro's firmer. We did reclaim a 117 handle a little bit earlier today. So that's the price action. Let's get to the trading diary. What you need to be watching through today into the end of the week. At the top of the hour, we get US consumer confidence data. A lot of Fed speak. Clarida, Williams, Quarles all speaking later this afternoon at 9 p.m. Eastern Time. President Trump, Vice President Biden, head-to-head. You know the story. The first debate, 9 p.m. Eastern. ECB President Christine Lagarde speaking ahead of the EU summit on Thursday. Plus, we get US GDP and jobless claims. And then really it's the main event this Friday. It is Payrolls Friday with a huge question for economists. To what degree has the recovery lost momentum? Is it decelerating going into year-end? And do we need more fiscal support? Overwhelmingly, the chorus from Fed speakers, with the exception of the St. Louis Fed President Jim Bullard, has been yes. This just coming out moments ago from Patrick Harker of the Philadelphia Fed saying the following: additional fiscal support is critical. Do we have a negotiation down in D.C., or is it posturing ahead of the election? That debate later. Is that critical for this market? That's a huge debate right now in and of itself. Yes, you will be watching it, but will it change your mind about who you're going to vote for, and will there be consequences for financial markets? I'll be with you tomorrow. We'll be with you through the day. Full coverage coming up a little bit later on Bloomberg TV and radio. From New York and London, for our audience worldwide, catch me on Twitter at Ferro TV. This was the countdown to the open. This is Bloomberg.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest-hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off. These guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
That's where they are right here.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of in life happens. You know, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji you use the most to send to each other?
So there's a bear which basically we use for indicating a hug.
Yeah, that's our language basically. Bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade and they helped us finalize the venue, and it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry city?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
Okay.
In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you.
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law with its swagger and ill-fitting suits caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
So there's just explosions and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty.
The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
It's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division. After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and he was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader.
His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network factories where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
People think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for
Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Brzezinski.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends.
But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start.
And from that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it was widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, and this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia
a regional power.
Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
Even though Putin denies any wrongdoing,
U.S. election. Yes.
the U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here, with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world. Yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC come to China, come to us, say,
You applied.
24 people went for the job. 23 people were accepted. I was the only one guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word, beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强就强它的硬件，强就强它的系统建设，这一方面确实比你早。但是玩信息玩软的，中国人的脑袋绝不比你们差。我们在座的所有人的脑袋绝不比你们差。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma's an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it's served him well.
Peter Thiel is a walking contradiction. He got his bachelor's and Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission
and several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different?
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, Valleywag, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You had a very special guy.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions and different jobs within the administration.
But it turns out Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
Two 2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree. Global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The US was primed to play a lead role in climate change, but Trump's Energy Independence Executive Order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the US commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and US states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. origins of the creative content of a lot of the work at Lightbright comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with an Adobe Illustrator file, and we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. Turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress. And sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature. And it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I learn so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube and we evacuate that out. We introduce the gas into it. And we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
bit like an addiction. You've got to make something, you have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. It's spend cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle. And it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker. So when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect a pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. You've got to practice, you've got to be able to judge material temperatures, you've got to just look at it and you just get a feel for it. It's the stage where your tubes start to look a bit like a bicycle. My father's a jeweller. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes, and you can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to a teapot, so we can get that scanned and we can match that, or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components, and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives. So we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom. So as soon as I had one, I was off. A lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something. It just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
If you ever saw a wooden surfboard, it was probably hanging in somebody's house or underneath the deck. But kind of in the last 10 or 15 years, wood has made a big comeback. They surf wonderfully. It's beautiful and it feels great to be on one of them. I always had a love for wood and kind of passionate about things that went in the water. I've kind of been around wooden boats most of my life. There's just so much character. The way they're built, the stories that come with them, a lot of that has translated over to why we build surfboards the way we do. When we first started thinking about building surfboards, wood was the natural material we chose. They have a very high strength to weight ratio. Wooden surfboards have the longest history of use in the surf world than any other material. People have been surfing wooden surfboards since kind of the first documented history of people riding waves. The board starts in CAD, where we take a 3D model, break down the shape, and kind of create frames and templates and all the inner parts of the board that we get cut on a CNC machine. We take those frames and we just pop them out, assemble the frame into kind of a skeleton. We go out to our lumber shed, pick a bunch of cedar, and bring them into our mill shop, put glue along the edges, clamp it all together into a panel. Everything's book matched, you have symmetry in the colors and texture of the wood. Cut your outline. Take our assembled frame, gently put it down right on top of the plank. Once that foundation is started, you're basically building up the three-dimensional shape, the outside part of the board, using lots of strips that kind of interlock and fit together. Every piece of wood is going to be different, and it's all going to react differently. There are frustrations with it, but I think that's one of the things that keeps it challenging. You learn to read the kind of what the grain lines are doing and what the color of the wood is telling you. Once those rails are cleaned up, we put our top planks on. It's a little bit like putting a lid on a box. It's like, this is it. Whatever's inside that board is staying inside that board. And by tensioning some rope, you can clamp the two together. It's like a time capsule. What makes our boards unique are they are built right here in York. They're built right here in the state of Maine. They're built 100% by hand by local craftspeople and surfers. There's a lot of time that goes into these boards, between 40 and 60 hours, start to finish. We wanted to build surfboards that were as hollow as they could be, but still be strong enough to work well. Too light and they don't surf well, but too heavy and they don't surf well. So there's a balance point there, and that's where we try to be. Taking the board off the rocker table, once the top has gone on, that is by far one of my top favorite parts. It's just you and a shaping stand, a board, and a hand plane. Everything else is out of your view. It's simple, it's pleasurable, it's quiet. You can be with your thoughts and you can just kind of be present. There's something about taking a nice sharp edge tool to a beautiful piece of wood and feeling the curls coming off and knowing that every pass that you're making, you're kind of getting it closer and closer to what you have in mind. Once we've shaped it down and the board's looking like it's supposed to look like, time for it to go into the glassing room. 4-ounce fiberglass, laying it over the board, draping it over the edges, cutting it, applying epoxy, and on the board. Once both sides are lamb coated, it's time to put in the hardware. Drill and router and install the fin box. And on the other side, we drill and put in the leash plug and a vent. There's a lot of air just naturally inside the board, and that air wants to expand and contract with temperature changes. And that vent has a little piece of Gore-Tex fabric in it, and it allows air to kind of breathe both ways, but it doesn't allow water to get in. Once all that hardware is put in, it goes back into the glassing room. We brush a nice, beautiful, thick coat of epoxy over the whole surface, and that we call a gloss coat. That's supposed to look beautiful and glossy and shiny and flawless. You get to see that board come to life. Whatever the colors in the wood, they really come out. It just makes it look like candy. You just want to touch it and run your hands down it, and it's just kind of the icing on the cake. Once everything is hard, we put it into what we call the oven. Get that epoxy to cure, really kind of bake it, and just get it to harden. Put in the fin, screw in the vent, and ship it out. We just love the idea of building something that's sustainable and long-lasting and made by hand. Kind of gives you a deeper connection to the product over something you might buy on a shelf. When a customer gets the board, they feel it. They 100% feel the amount of work and the amount of passion that went into the board. So I'm not really looking at hours and efficiency. We're looking at like doing it right and enjoying it as we go.
Baoli, better known as Gang La, is one of the 4 grand marshals leading New York's Pride Parade this year. But in the country he comes from, being gay is still a social taboo. The CEO of a Beijing-based internet company is on a mission to improve the lives of millions of gay men in China.
对于每一个 LGBT 人群来说，即使这个国家不允许你跟同性爱人结婚，但是你仍然要勇敢地去选择你自己的生活，你仍然应该拥有幸福生活的权利。
Ma's company Blue City runs an app and a website specifically for gay men. Blued is one of the biggest gay social networking apps in the world, with an estimated 30 million registered users. Unlike most other apps, Blued is more than just dating or hookups.
大家可以在我们这个软件里面找他自己的情感，然后可以阅读相关的内容，然后可以进行一些娱乐，比如玩游戏啊，比如看直播啊等等。
Back in 2000, when Ma studied at a police school in northern China, he realized he didn't feel like everyone else.
因为他们都找女朋友，然后谈恋爱，但是我对长得好看的同性的男生，我反而觉得对我更有吸引力。所以那个时候我就到互联网上去找这样的一些资料，然后希望能够告诉我自己，我到底是谁。互联网上所有的信息都是负面的，都是错的，就是说同性恋要电击疗法，要被治疗，然后要吃药等等。
After visiting some foreign websites with different attitudes to homosexuality, Ma created his own site for a Chinese audience, encouraging people that
他们也是正常的，他们不用自卑，然后也不用自杀。
Even though attitudes towards homosexuals are slowly changing in China, it's still a social stigma. The virtual world of Blued, where members can be open about their sexuality, is for most a striking contrast to their real lives. This is live streaming, a function added to Blued in late 2015, right as the internet craze was starting to take off in China. Many self-made stars like Jin make decent amounts of money by receiving audiences' virtual currencies and gifts.
我们不是彼此的初恋，初恋这种事儿多不靠谱啊。
For Kyle and Klaus, a couple who have come out, live streaming on Blued means something different.
其实我经常会收到很多粉丝的一些互动的留言，就是类似就是说你们让我们看到了同志情侣之间的一些希望啊，我看到这样的留言我是很欣慰。
The government's rules for acceptable content online may shift quickly in China, with LGBT material in a grey area. Many companies feel the chill of the recent internet crackdown, but Blue City still runs as usual. Ma has won the Chinese government's trust by helping with HIV prevention among gay men. A third of the company's staff are dedicated to screening pornographic and politically sensitive content.
我不太多的愿意去对抗，我更多的愿意去对话，去改变他们的想法。我觉得这个可能在中国来说是更有效的。
In the past 5 years, Blue City has grown from a team of 7 people to a promising business with about 250 staff. Ma said the company earned over $15 million last year, mainly through advertising and selling virtual currencies to live streaming audiences. Now the company is expanding overseas.
我希望吧，通过我们的努力，Blue能够成为全球第一家在美国纳斯达克或者是纽交所上市的这样的同志互联网公司。
This is Rich Chiga. He's a Chinese rapper by way of Indonesia, and he's very popular on the internet. This is Joji. He's a Japanese-Australian singer, and he's also very popular on the internet. Plus, Joji invented the Harlem Shake meme. Let me say that again. This guy, Joji, in the blood bathtub, invented the Harlem Shake meme. But we'll come back to that. So Rich and Joji are both signed to 88 Rising, an entertainment company hoping to build a lasting global brand that will outlive singular moments of virality. They primarily create content combining Asian culture and hip-hop, a formula that apparently pleases the internet gods greatly. They've only been around for 18 months, but they're already putting up major label numbers.
I think that we have an unprecedented collective of talent, a group of like predominantly Asian artists, you know, really like making waves globally, which from an independent point of view as well.
88's founder, Sean Miyashiro, cut his teeth launching Vice's electronic music channel, Thump. But quickly, Sean became interested in life beyond dance music.
I knew that after launching a whole content platform that I have kind of the ability and the know-how to do it again, but like for what was the question.
So Sean moved to the Bronx to start over and figure it out. He couldn't afford an office space, so he worked out of his car at the top of a grimy parking garage.
Everything kind of started here. If you look around, this is my environment. This is my serenity, really. 88 Rising was built here. Built on the grounds of LA Fitness, residence in a parking garage. I was living in the Bronx. I'm just like, damn, where the hell do I go? So I just come up here and I I just kind of figure things out every single day. Being like, okay, what the hell is this thing? Coming here was kind of like my own kind of private office, basically. Like, to be honest, I would even go to the bathroom here. I would like take pisses here, you know what I mean? Like, it was, it's just too far to go back down there. When I need Wi-Fi, I'd spend a good part of the day at Dunkin' Donuts. Hi, how are you? Can I get a chicken snack wrap?
Before 88 Rising officially launched, Sean caught a surprise break in the form of a Twitter friendship with a funny 16-year-old kid from Indonesia named Brian, who taught himself English by watching Rubik's Cube tutorial videos on YouTube. Seriously, that's true.
I thought his Twitter was genius, from the future, just crazy, and like just the shit that he was saying, like the memes he was making. But I didn't know that he rapped or anything like that. I really didn't, and he came up with Dat Stick like 2 weeks later.
12 in the morning, pop shells for a living and berry gon' smell blood trail every minute road.
Dat Stick was Brian's first ever attempt at making a rap song, and it immediately went viral.
Everything was great about it, but the one thing that I noticed is the song was hard as hell. Just like everything about it, man. Just like, it was menacing, bro.
Soon after the video dropped, Brian signed with 88 Rising.
I'll FaceTime with Rich. Sorry for calling you Rich Chiga on my phone, Rich. Brian, he gets like super pissed off that he's saved in my phone as Rich Chiga. He's like, dude, am I not a human to you? What's good, bro?
What's good, brother?
How you doing?
Doing great. I just did a sound check.
How was it?
It was tight.
So, Brian could definitely rap, but some viewers understandably took offense at a Chinese kid satirizing rap cliches and calling himself Rich Chiga. But if a group of well-known rappers saw the video and genuinely liked it, that could at least help validate Brian as a legit hip-hop artist. Plus, it could be really funny.
It was just kind of an idea that I just had on the spot. Everything that rappers say is better and funnier and smarter and wittier, you know, and it's just more entertaining. We just edit it as tight as possible, put it up, and
it really worked.
12 in the morning, pop
Yo, this nigga got a pouch on and a Reebok pouch. This is the hardest nigga of all time.
You said when you come for a trigger like me, that was dope.
Like, it's just lit, and I think people will take it as a joke at first, but it's like if he ran with that and kept doing more videos like that, it's just lit.
You know, I'd never been to America before, and like all of a sudden, it's like I see like all the rappers that I listen to just like reacting to my stuff, and I was like, what? How did this happen?
The reaction video also went viral, and even led to a remix of Dat Stick featuring Wu-Tang's Ghostface.
I'll get on that track. You know what I'm saying? Yeah.
Really, on the remix?
Yeah. Oh, you know him?
And yeah, the remix went viral too. Brian has since acknowledged the misstep in his name and claims he may change it. But for the time being, he's still Rich Chigga to his fans. An ever-growing global audience, hungry for more releases from emerging talent around the world.
I didn't know that it was gonna be this impactful and this important to people, and I'm very thankful and blessed that it has. And every day now that I wake up, it's like it's just like a new mission every day.
A major part of that mission involves Joji. Remember the bloody bath guy? He's a former YouTube personality in the middle of a career transition.
The sound of this song, Will He, it's like a trap song that you can like slow dance to. Awkward prom shit, you know what I mean? I used to do crazy episodic internet videos. It was going well. And one day, it was me and a few friends just in a room. We were casually chilling, and then someone plays the song, and it's brand new at the time. I happened to have a lot of costumes laying around, so I told the other guys, I was like, get in these costumes and let's just dance to it, like who cares? We were like, okay, let's just go crazy at the drop. So that video goes up, I go to sleep, and the next morning, everyone's doing it, like next morning. That taught me a lot about the internet, how people want to just be a part of something. And from that point on, something changed, and I was a little better at understanding demographics and people and what they want to see and what they want to hear. I was friends with a couple other artists who were affiliated with 88, and then I also started to realize that 88 is the bridge between Western and Asian entertainment, and I really wanted to be a part of that.
Joji just released the In Tongues EP, his first project as a serious artist.
Joji's In Tongues record came out a couple weeks ago. It's #2 on Billboard on the R&B charts, which is crazy for, an independent release, and he's like a brand new artist.
And the success is even more impressive, knowing he went from creating something like this,
"It's just Taco Bell, what could possibly go wrong?"
to creating something like this, the newest music video for his song Demons.
The demons told me everything, they whisper in the night. This is not a threat, a promise.
Tonight, Rich Chigga has a show in New York City. Tickets sold out in an hour.
I came here, I'm first online. I was here at 1. Yeah, I was the third person online.
So why'd you get here so early?
Because I want to see I want to touch him.
What do you guys think of Joji?
He's
That's my dad, son.
You guys cop the new EP or like?
Yeah. I woke up at 6 in the morning just to cop that shit. And then I listened to it, and that shit started making me cry.
This is actually kind of exciting. Every time, this never gets old. Like, you live online and social media, but like, there's nothing like just being with the people.
More often than not, viral success happens by accident. And then after an appearance on Ellen or Jimmy Kimmel, the creator's star power fizzles out. But 88 Rising has figured out how to turn potential gimmicks into brands with an actual following that keeps coming back for the next thing.
Oh, shit!
So keep an eye out for 88's next move. But more than likely, it won't be covered on network television or terrestrial radio. Although, as they've already proven, nowadays that really doesn't matter.
Online retailer Farfetch is betting it can shape the future. This is its concept store, showcasing the latest in retail tech.
How do you capture all of that fantastic information that you gather in store when customers touch and feel products? And we created a concept called the Connected Rail. And this is using a combination of RFID and ultrasound. The RFID signal recognizes the product, and the ultrasound recognizes the movement. Take the product off, and then you'll start to see your products appear. And essentially, it's like online browsing behavior. Whichever products you touch and pick up in the store are automatically sent to your app. This is effectively what you've created is your in-store wish list. In the middle, you'll see essentially a hologram of the product. What the customer sees, they control the experience on a touch device. What this allows the customer to do is take elements of products and then add their own style to it. Right, so this is the connected mirror. So in this example, I see my products. I select a coat, and that's tried it, and it's slightly too big for me. So what I can do is choose an alternative size and send a request to the sales associate, and they'll bring that size to me in the fitting room mirror. You'll also see that we've got some product recommendations here. Crucially, the sales associate's able to push items into the mirror from their device. If you wanted to, you could simply use the mirror and pay and go. Your items would then be packed and dispatched to you afterwards.
Do you want me to turn you so you're looking outwards? Yes, please. How about there? First time we came out with B, Jade said it feels like I've been released from prison. Do you want these, Mrs?
Definitely.
Definitely. Right. Yeah. And she could say hello to everybody, people she hadn't seen for months.
It's
Jade.
Jade.
Oh.
So you can talk to Jade through this.
Hi, Katie. She's there.
Hi.
Every time anyone's seen her, they want to know why she's there. And it's kind of the opposite of when you're in a wheelchair and people see you and they kind of go, oh, should I look? I don't know what the right protocol is. When there's a tiny robot with its bright little eyes going around just looking happy everywhere, it really opens you up for conversation.
We've got some friends here, look.
Hiya! When I saw her for the first time, I remember thinking, this is going to change things. This is one of those points where if this was a book, this would be the cliffhanger. have a condition called Ehlers-Danlos syndrome, which means that I have a lot of dislocations, there's a lot of pain, and a lot of seizures and whatnot. So I can end up on my own in my room for long periods of time. A lot of the time with a condition like my own, of course there's the pain, and the pain is bad, and the dislocations are bad, and the seizures and being in paralysis and never knowing whether you're going to be able to wake up properly tomorrow, that's bad. But what's worse still is being able to count the number of people you see a day on one hand.
Are you ready?
Sure am, I'm just hoping the connection's going to stay.
Yeah, me too. Alright, here we go.
When you're used to just the same little metre by metre and a half window every day, and you've been there for months, being able to just see the sky from somewhere else, or the tops of trees, or a sign, is incredible. Or being able to have that kind of chat in the car that most people would probably take for granted.
I'm going to go past Grandma and Grandad so you can give them a wave. Now, if Jade is particularly seizure-y, she can still take part. And that's brilliant, really, because before she would just be left in a bed or in a house with just her carers. It's quite a small world, that.
Right, so there's one of her. Here, this costume I'm busy making at the moment. When I'm not on bed rest and I'm not just wearing pyjamas all the time, I enjoy being able to dress as different characters and go to Comic Cons and that kind of thing, because it just lets me show a different side of myself, and it's a bit of fun. If you can't go out that often, you've got to enjoy it when you do.
Was that? Good.
It's one of those weird things where I want to not have to use B because I want to be well enough to be able to go to those places myself. Like, it really makes a big difference to me to be able to go into school. But the thing is, with my condition fluctuating all of the time, I can't go into school reliably.
He's written it out bigger on the board. Thank you.
Today's the first day that I've been in school via B, and so far it's interesting. Still a few little things that we need to work out, but for the most part I think it's going fairly well. And it's brilliant because I can really tell the difference between today and yesterday. How yesterday I forced myself to go into school when I wasn't very well and I was really tired afterwards and ended up having loads of seizures, whereas today I've been able to do all of the work, I've been able to keep a clear head and not be ill, which means I'm able to be more focused on my schoolwork.
So there is my first step of working, is to simplify root 8. The algebra test is next week.
Now I'm trying to make friendships which I'll be able to maintain with B. Before that, I end up letting people down quite often. B gives me hope, yeah. She's just always there, and if I can't do something, she can. And if I need sort of assistance to be able to make commitments, then she's there, and she means that I feel like a more valuable person because I'm more reliable.
it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
The cubicle represents a tyranny. It confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Good, thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with two hands and rotate the thing. I can stretch it. I can throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Myron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic wild. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now...
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
This is Hatsune Miku, Japan's sensational virtual pop star. She's released over 100,000 songs in multiple languages and performed sold-out concerts around the world. Her image has appeared in games, on TV, in car races, and is even etched on the side of a Japanese space rocket.
I came from Hatsune Miku, Carlos.
She's Lady Gaga's favorite digital pop star and opened shows for her in the US 3 years ago. Tens of thousands of fans attended her exhibition and live shows near Tokyo recently.
理想のアイドルっていうとどの曲でもミクはすごい綺麗に歌ってくれる。
他没有缺点啊，没有任何让我们感到不开心的一些新闻。
She's everything to everybody. That's probably why she's so popular.
Miku's creator Hiroyuki Ito and his Sapporo-based company have been developing the virtual diva for over 10 years.
初音ミクとはキャラクターとしてすごくYouTube とかで検索するとたくさんの初音ミクが出てくるんですけども、元々の初音ミクのその原点は歌声を合成するソフトウェアなんです。
Both the software and character are named Hatsune Miku, meaning the first sound of the future. Originally based on Yamaha's Vocaloid technology, Miku the software has a sound bank containing voice samples and a huge array of tools. You input the melody and lyrics, then Miku the character sings them.
Happy birthday to me. Happy birthday to me.
To date, Krypton has sold 120,000 software licenses at $200 each to fans around the world who use it to create numerous songs and share them online. Some of the fan-created songs are chosen to be part of Miku's concerts, for which they're paid a royalty fee.
もともと初音ミクっていう存在自体がボトムアップって言いますか、中にはアマチュアクリエイターじゃなくて今もうすでにプロになって活躍している方もいらっしゃるんですけども。
The company also has other revenue streams. It makes money from merchandising, licensing deals, and concert ticket sales. According to the real-life musicians who perform with Hatsune Miku, the virtual pop star is interesting and surprising.
今年で3年ぐらい、ちょうど3年ぐらいやってきて、ライブも数十本、数百本だったので、そういうことが演奏によって起こせるためのそういう器みたいな感じになっています。初音ミクらしさって僕はあんまりない。初音ミクって何だってありっていうか。
For Ito, Miku has the potential to change the way we think about music.
そういう新しいテクノロジーによって新しい音楽のあり方っていうものを模索していきたいと思っていました。
And for her fans, it goes even further.
初音ミクって魂がないので、だからみんな魂を作り上げるために存在する。
Now, there are a lot of fitness gadgets out there. In my quest to get fit, I tested 17 of them over the last few months. At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the Bowflex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in Zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, and my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the Move HR Burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer, but humans, they're expensive. For the rest of us, this $60 gadget is all you need.
what does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, US Navy, and other branches of the US government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the Collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
I'm about to expose everything you won't admit. And action! This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh, but to fans all over the world, she's the YouTube star Superwoman.
What up everyone, it's your girl, Superwoman. I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada was like, Canada, is your daughter making videos? And I think my mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and then have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010 and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my god, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi Lily, where the rest of your skirt, huh? I teach you like this to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And we're pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up everyone, it's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about like, I will save guys with my superpowers and I will save girls with my superpowers and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe this should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was in his prime. And Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did, and should anyone's palate dominate it the way his did?
I just think the world is very different today. It's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did. Because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along. It's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. That was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin. Mm-hmm. So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt or die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Laura, thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing in new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but This is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world. And I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, etc. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of...
Profits would help. So at some point we absolutely have to become profitable, and that's part of the plan.
But do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things?
Well, I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, etc., sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got as sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
Some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that these are conversations that a number of regulators and cities have wanted to have with us for many years. And I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, etc., but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in
means
to
a layman like
feathering
me?
Crashing. Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also...
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars? I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars you have to deal with existing roads, existing everything. Flying cars, essentially, you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back, somewhat reluctantly, back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you
a brand.
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people.
That's telling me.
Just not interesting. I do think seriously, though, the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard. but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward, and 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking in some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers. The tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership, so it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company. And to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Whoa, live from New York and New Jersey, our home, streaming on YouTube. It is Tuesday, September 29th, 2020. My cell phone going off because, man, there is so much news going on. And we're going to talk a lot, Jason, about politics and the pandemic. They're going to come together at tonight's first U.S. presidential debate.
Yeah, was it the nation texting you to say, we've got a debate tonight and also a global pandemic? It's all happening,
We're like,
Carol.
Masser,
Reminder.
there's so much going on.
Masser, just a reminder, stay on the news.
Masser, you're
amazing.
not going to sleep tonight. No,
Yeah.
Exactly. So we got a lot to cover over the next few hours. And I got to say, virus numbers worsening in New York, hopes for more stimulus fading. That's weighing on the trade today. All right, let's get you going. Let's check in with Charlie Powell.
Hi, thank you very much. Here's what's going on. Happy Tuesday. And, of course, that debate. 9 o'clock Wall Street time is when the debate gets underway. Our coverage, of course, 8 p.m. Wall Street time right here on Bloomberg Radio. The Dow, the S&P, NASDAQ slumping, led by losses in energy and financial companies. After, as Carol mentioned, data showed New York City's rate of positive tests rose above 3% for the first time in months, and those stimulus talks ending without an agreement. Here's where we stand. We are well off session lows with the S&P down 8 now, a drop of just about 0.3%. The Dow is down 83, lower by 0.3. NASDAQ is down 5, a drop there of less than 0.1%. NASDAQ 100 index down by 0.1%. 10-year up 2/32 yield, 0.64%. Gold up 0.8 at $18.96 the ounce, and West Texas Intermediate crude dropping 4%, $38.96 a barrel. Recapping equities lower, S&P down 8, lower by 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Massar here with you on a Tuesday afternoon, a busy Tuesday, looking ahead to that debate and looking at a market that feels a little bit more worried. You just heard the numbers from Charlie Pellet, but let's set the Business Week agenda with our team. Vincent Signorella, global macro strategist for Bloomberg. He's just down the road from me in White Plains, New York. Katie Greifeld, she's back at home, our normal home, the Bloomberg Interactive Brokers studio, I should point out, a cross-asset reporter for Bloomberg. Vince, I want to start with you because you were kind enough to share your thoughts via message with us yesterday about what you were seeing in the trade. What are traders talking about today? What's happening that is giving that sort of slightly negative tone?
Well, actually, it's a pretty interesting counterintuitive thought. What traders are concerned about today is that Trump actually wins the debate, closes the gap with Biden, and potentially creates a contentious election if the results are very, very close. And that, what normally would be, you would think, a risk-on move. Wall Street prefers Trump versus Biden, essentially. But in this case, by closing the gap, they would consider this a risk-off move. And they think that going into tonight, if that's something that happens, you could see a sell-off in equities tomorrow and a bid in the dollar.
Yeah, listen, right? Uncertainty. This is not what we need right now. We've got enough of it. Thank you very much. Katie, come on in on it. What are you seeing in today's trade?
Well, just to follow up on a point that Vince made, I absolutely agree with him. The traders that I'm talking to are super worried about just the notion of a contested election and delayed results. And I mean, if you look at the precedent there, it's not so great. The closest history we have is 2000, and in the month it took to figure out the results, you saw the S&P 500 drop by over 4%. So that's definitely weighing a little bit on nerves today. But I think the bigger issue, just zeroing in on today's action, is that virus headline for New York City that we've been talking about. You know, New York City has been a relative bright spot. So to see an uptick like this really sent a shudder through the markets. And it's playing out how you would expect. You know, you see most sectors in the red today, but your so-called stay-at-home trades are falling the least. That's tech stocks, it's communication services, and they're just powering ahead.
I gotta say, I put that out on Twitter, man. I got so many retweets and people piling on because they're like, okay, here we go. I mean, New York City, number. Right, Jason, has been kind of the golden child when it comes to the virus.
Yeah, and it's, the positive, or I mean, the less scary part about it, I guess, is it seems to be a little bit contained, but then as the day goes on, you start to see a little bit of political reaction. You start to see just some worrisome things, even down to the governor of New York saying, well, I'm going to send in the National Guard to pick up the trash in New York City, just like poking the bear a little bit when it comes to the mayor of New York City. So if you're a trader, Vince, are you just sort of hanging on through the election here? Like, how are you playing the next few weeks?
It's a tough call. I think you've seen the dollar sell-off pretty aggressively in the past, and I think that you're going to see some of that trade taking back profit-wise. Similarly, you might see a little bit of stability in the stock market in general, unless we get big breaking news. What Katie mentioned about New York City viruses is very big news, and while you mentioned it's contained, you have to remember it started out very contained in New York City. Remember, New Rochelle was the one outbreak, and then before we knew it, it was all over the city. And you and I have been talking about this for weeks. We're waiting to see how New York City comes, and that is what traders are looking at. If New York City gets a second wave, and I talked to a buddy of mine last night in Hong Kong, and he said, wait for the third wave because that's what we're getting. Exactly. If New York City gets a second wave, you're going to expect the rest of the country to do so, and you're going to probably see Cuomo lock down the economy again.
Right. Right. Yeah, I mean, and this is coming amid headlines from about people we all know in terms of New York City back to office and those numbers being a lot lower.
Well, JP Morgan yesterday saying, okay, you consumer folks, you can stay home, basically. Katie, last thoughts? Just got 20 seconds here.
Well, in terms of what could sort of shake off the risk-off mood, if we do get that second wave or third wave, it could be a progress in stimulus negotiations. Those have stalled out. So the silver lining here, if you can call it that, is if we do see virus cases pick up, perhaps it'll urge Congress to move a little bit more quickly on getting additional support out to the economy.
Vaccine lining. I don't know.
Yeah.
I'm going to call it something else.
Yeah.
I don't know. Maybe that's weird.
Yeah, that stimulus question looming large there on Capitol Hill, especially as lawmakers start to take up a Supreme Court nominee as well. Katie Greifeld, thank you so much. Back in our Bloomberg Interactive Brokers studio, cross-asset reporter for Bloomberg. Our thanks as always as well to Vincent Signorella, global macro strategist for Bloomberg. He joined us on the phone. Carol.
That was a perfect market setup because that's exactly how it feels today. Hey, let's talk about this broadcast because over the next 4 hours, we have an unbelievable lineup. We've got Dr. David Levy. He's the CEO of the healthcare company EHE Health. This is all about preventive health, but he's going to talk about the pandemic after the pandemic. So some really thoughtful observations, maybe troubling observations as well. And then, Jason, we're leaning big time into the election tonight and the debate tonight.
The debate is happening. So many politics swirling around. We have an independent political strategist, Reed Galen. He's going to be along. He's worked on a bunch of campaigns. He's an author, also the co-founder of the Lincoln Project. They certainly have been vocal through all of this. We're going to check in with Kevin Cirilli. He is the hardest working man in Hollywood. We know he is going late into the night tonight. He's going to join us from Cleveland. Plus, it's all about the vote in many ways and getting out the vote coming from some potentially unusual sources here.
Yeah, I love this. We're talking about two nurses on the Upper East Side. Man, they've been working on this. It's a project they created a couple of years ago, and they are all about signing up patients to vote. And then pre-pandemic, I think a subject that might have been near the top of the agenda for tonight's debate, big technology. We've got a great former tech executive entrepreneur. She's got a book out. It's called Trampled by Unicorns, Big Tech's Empathy Problem and How to Fix It. We're going to talk with Mae Gave. She is the former COO over at Compass. She understands technology, and so we're going to dig into this with her.
Well, and I think you do not have to go far to draw that connective tissue between big tech and the election as well. It all ties together. As well as tying together Sean Donnan. He's always there for us, pulling together the economic threads that are out there. He's talking about the Cleveland Clinic and how it's a bit of a contrast with the neighborhood where it is. That's where the debate is happening tonight.
Yeah, let's get to the Bloomberg Business Week Bite of the Day. One number that tells us a lot. It's 7. It's a small one. Bankrupt gunmaker Remington Outdoor splitting up its businesses, selling the pieces to 7 different buyers following a bankruptcy auction. According to court records, the biggest sale going to Minnesota-based Vista Outdoor. They're going to pay about, I guess, $81.4 million for Remington's brand. So, yeah, changing times here.
Absolutely. Certainly a controversial company. All right, let's get down to Washington now. Nancy Lyons is there with a lot of world and national headlines. Hey, Nancy.
Hey, Jason. Supreme Court nominee Amy Coney Barrett has been making the rounds on Capitol Hill after being introduced today by Senate Majority Leader Mitch McConnell.
We're pleased today to welcome Judge Barrett to begin the process of advising consent in the Senate.
Senate Minority Leader Chuck Schumer says he will not be meeting with Judge Barrett, saying she's part of an illegitimate process and wants to do away with the Affordable Care Act. Democrats argue Justice Ruth Bader Ginsburg's replacement should be chosen by the winner of the election. Tonight's presidential debate is supposed to focus on 6 topics, including the economy, the pandemic, civil unrest, election security, the Supreme Court, and the candidates' records. But a 7th topic that's on everyone's mind is bound to come up. Bloomberg's Amy Morris reports from Washington.
The question is whether the president ducked paying his taxes. The New York Times report that Donald Trump paid only a few $100s, if anything, in federal income taxes allows Joe Biden to draw a distinction between his working-class roots and the wealthy elite of Park Avenue. But President Trump won the White House in 2016 after boasting about not paying taxes, saying that it makes him smart. Watch for the president tonight to accuse Biden of planning to raise taxes once in office. In Washington, I'm Amy Morris, Bloomberg Radio.
Well, Joe Biden and Kamala Harris released their 2019 tax returns today, with Biden and his wife Jill paying almost $300,000. Harris and her husband paying more than $1 million. Tune in for live coverage of the debate beginning at 8:30 p.m. Wall Street time on both Bloomberg Radio and television. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thanks so much. You are listening to Bloomberg Business Week. Jason Kelly, Carol Master. Well, I want to go back to something we mentioned in our conversation there with Vince and Katie, and that is what's going on here in the tri-state area, specifically New York City, our home office right there in the midst of this. And some disturbing data, candidly, coming from the mayor, Mayor Bill de Blasio, about positive rate, the positive case percentage, more than 3%, the first time since June.
Yeah, exactly. And I have to say, Mike McKee did a really smart...
That was a dramatic pause.
Well, sorry, I was reading too many different things at the same time. Mike McKee, who covers all things economy for us here and policy at Bloomberg, was on with David Weston and really put it in perspective. There are a lot of zip codes in New York, and he said it's predominantly some religious communities specifically. It's also happening where there are schools, and so what the city is working really hard to do is really kind of, figure out where it is and contain it. And I guess they're doing drive-bys and making comments about, wearing masks and distributing masks. And if it doesn't happen, I think they're going to start shutting things down. It's a troubling number, but it is concentrated in certain zip codes. And it is important. I mean, this is part of the process, right? Understanding where the problem is, containing it, hopefully shutting it down so that we do not have to shut down the entire New York economy.
The optimistic side is we've seen this. We've seen this happen before.
Correct.
We know intellectually how to deal with it. So let's see if we can do that. Some other optimistic news, candidly, is a study about the New York City subway came out and basically said low risk for virus transmission there. That's good news, largely because everyone's been rationally or irrationally worried about the commute, getting to the office, assuming the offices are open and things like that, and all that remains to be seen. But getting to the office, maybe it's not as dangerous as people were worried about.
Brought to you by a National Association of Transit Agencies. Just going to say.
Oh, boy.
I'm just going to put that out there. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks lower. The end-of-month rebound in global equities is evaporating as investors are discouraged by prospects for fiscal stimulus and the outlook for the coronavirus pandemic. Oil is tumbling. Let's begin there. West Texas Intermediate crude down 3.6%, $39.14 a barrel right now on WTI. Gold is up 0.8%, $18.96 the ounce, and West Texas Intermediate crude, as I mentioned, lower now by 3.6%. We've got the 10-year yield 0.64%. S&P 500 index down 10, a drop of 0.3. The Dow is down 88, lower by 0.3%. Nasdaq down 12, a drop of 0.1%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Well, you just heard Charlie talk about some of the things weighing on the market here, and one of them certainly, Carol, is the spiking cases. And not to be too much of a homer, too parochial, but we're very focused on New York City and what's happening here because we remember all too well what happened earlier in this pandemic. Let's check in with Dr. David Levy. He is Chief Executive Officer of EHE Health. He joins us on the phone from New York City. Dr. Levy, really nice to have you with us.
Thank you very much for inviting me.
So let's talk about New York. Let's get right down to it because you're seeing the same numbers and probably more numbers than we are. You're also looking at them with a much more sophisticated eye, certainly, than I am. What do we need to know? What should we be worried about? What should we not be worried about as we see this new data?
Well, it's important to understand that it's not unexpected that we should get spikes and we should get focal outbreaks, particularly since the only tools we have at hand are what I call Public Health 101, namely masks, washing your hands, social distance testing, contact tracing, and quarantine. And frankly, if people relax from those disciplines, then we're going to likely see focal outbreaks. And I think, as you see, and has been highlighted by both the governor and the mayor, some of these outbreaks are happening in particular neighborhoods. And likely at the bottom of it is people who have relaxed on those disciplines.
Well, and it's interesting. I wanted you to talk a little bit about what you guys are seeing at your company specifically in terms of virus trends and other healthcare trends, pandemic-related or other.
Right. So, what we've been focused on not only is getting our folks back to work and helping other companies get their folks back to work and keeping people informed on kind of what we call the Public Health 101 and frankly, cautiously optimistic through the emerging new technologies that we believe by Q1 of next year will really make a dent in this, and that's basically rapid testing, antivirals, and vaccines. We think we're going to see the waning of this and the economy coming back certainly by the end of the first quarter of next year. Now, I'm saying that cautiously optimistically. We call epidemiology the exact science of probabilities. But in the end, we feel pretty comfortable about that. But we're now focused on is what's going to happen after the epidemic. And what's pretty shocking is some emerging evidence, particularly from some of the large health payers. And I'm referring specifically to a webcast we did in conjunction with United Health Group last week, where we're seeing upward of 50 and 60% of reduction of preventive health and maintenance visits for people who have put off all of that health care because they're staying home or because their state has gone into lockdown. And there is going to be a very significant accumulation of undetected cancers, undetected cardiovascular disease that is going to start reemerging in 2021 and 2022. And I think people are going to we should start thinking about now how to be prepared for that.
And that's simply because people just aren't going for checkups, and so things that would be detected in the normal course of business just aren't?
That's exactly right. So let me tell you some statistics for New York City. Wellness visits down 56%, diabetes screening down 61%, breast cancer screening down 68%, colon cancer screening down 75%. So we have a whole cohort of maybe close to a year of people getting all this stuff done who aren't getting it done. Well, just because we don't do the testing doesn't mean they're not going to have the disease. And ultimately, we're going to start seeing all of this backlog start to come up and at a later stage, and rear its ugly head, frankly, in the years 2021, 2022, and beyond.
So where's the healthcare system helping individuals? Because I think what happened was healthcare systems just shut down and basically would only take COVID, patients or dealing with COVID. And I understand it because these systems were strained. But where is the healthcare community, on a large scale? This is a war. This is a health war, coming together and saying, okay, this facility is going to be for, routine checkups and routine conditions and making sure that we're doing, colon screening and breast cancer screening and all of that. Where is that happening? Especially if we go into a second wave, or as we were talking with some of our market folks, a possible third wave.
So, Carol, that's a great point. Look, by necessity, when you have, like we had in New York, an overwhelming number of cases, you have to focus on the people who are very ill and who are dying. There's no question about that. But as you move through the stages where the hospitals now have capacity and the healthcare system has capacity, people are reopening all over the country. Primary care, preventive care, health systems are reopening and trying to encourage, has taken care of and made the environment as safe as possible. They're going to get COVID likely if they show up in bars, in crowds, and they're not wearing masks and they're not social distancing. It's not a well-controlled hospital, or it's not a well-controlled doctor's office where they're going to get it. And so, and frankly, people are afraid. They're afraid to use the public transport system. They're really afraid to step out and start re-engaging in these behaviors. And candidly, at EHE Health, that's what we're up to. We're up to reaching out to these people and helping them step out and get back into preventive health care.
We need to talk a bit more about this, because I know I have, as soon as kind of our world opened up, I've done half a dozen things, and I'm getting ready this week to do another thing. So I'm curious about which people are still holding back, and kind of how we do it. So we're gonna get into that, Dr. Levy. We've got to do a little bit of news, but we'll come back and continue the conversation with Dr. David Levy, CEO at EHE Health, on the phone from New York. I mean, Jason, he brings up a good point, but I know a lot of people who have been reaching out now that the world has reopened. So I want to understand it.
Yeah, I also want to understand from him, if we do have time, sort of more about preventive care and whether whether we're sort of moving forward with that, or whether we've taken a step back when it comes to preventive care, because there's some interesting statistics out there about essentially like healthy people are into it, less healthy people are less into it, and so how do you bridge that gap? How do we sort of turn this system, if we can, to being more preventive, because healthier people cost less money, healthcare costs come down, like it's all a virtuous cycle. Right now it seems pretty vicious, though.
And a better quality of life, no doubt about it. You're listening to Bloomberg Business Week on Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Massar along with Jason Kelly. We're talking about the latest on the virus. Also, though, about preventive health care. And we're going to get more of that. We're going to continue our conversation. Dr. David Levy, CEO of the healthcare company EHE Health, he's going to join us once again. But Jason, in the meantime?
Yes, interested to hear about that, especially from the perspective of employers. It's key to how businesses run. Yeah. In the meantime, let's get to Charlie Pellet, understand what's going on in the trade today. Hey, Charlie.
Well, hello there, Jason Kelly. We've got NASDAQ just turning around on the plus side now. NASDAQ is up by 1.5 points. Little change there. S&P 500 index still showing a loss, down 4. Little change, but down less than 0.2%. Dow Jones Industrial Average now lower by 27 points, a drop there of 0.1%. S&P being led lower by losses in energy and financial companies after data showed New York City's rate of positive tests rose above 3% for the first time in months. Also, stimulus talks ending without an agreement. MGM Resorts International is making a bid to win back its lucrative meetings and conventions business by borrowing some technology from the National Hockey League. The company is the largest operator of casinos on the Las Vegas Strip. It will deploy temperature checks, rapid COVID-19 testing, and mobile IDs to screen and reassure customers returning to the city for business. MGM shares, they are trading lower now by 3.5%. Andrew Murtha is Vice Dean for Faculty Affairs and International Research Cooperation at the Johns Hopkins School of Advanced International Studies. And on Bloomberg Television this morning, he spoke about the latest numbers out of China, its economic recovery, as well as the global coronavirus pandemic.
One of the things that we're seeing is that there's likely a doubling down on state-led versus market-led development in China. We're seeing stimulus not necessarily going to people to increase consumption, but rather it is being channeled to larger infrastructure projects.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. J.P. Morgan Chase has admitted wrongdoing and agreed to pay more than $920 million to resolve U.S. authorities' claims of market manipulation in the bank's trading of metals, futures, and Treasury securities over an 8-year period. It is the largest sanction ever tied to the illegal practice known as spoofing. J.P. Morgan Chase shares lower today by 0.6%. Recapping, S&P down 2 points. It is a mixed day here. S&P down 0.1. The NASDAQ Composite Index up 0.1%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. We do want to get back to Dr. David Levy, CEO of the healthcare company EHE Health. He is based in New York City, and that's where he joins us on the phone on this Tuesday. So before we went to break, we talked about preventive health care. And, Jason brought up the point, Dr. Levy, that, are we seeing kind of a rethink when it comes to corporate health plans and just healthcare in general, that it is becoming more about preventive? We know it needs to be, but are we seeing any kind of concrete steps that are taking us there?
Yeah, well, that's a great question. So just as a backdrop, we published a paper with our colleagues at the Mailman School of Public Health at Columbia and IBM Watson Health in March, showing that despite Obamacare covering 100% of preventive visits, only about 30% of people go, and when they go, they don't even get the right stuff. Now, the interesting thing about the COVID pandemic is that it preferentially hurts and kills people who have diseases of lifestyle, overweight, high blood pressure, diabetes, cardiovascular disease. And in fact, the mortality is about 10 times the expected mortality when you have one of those lifestyle diseases and you get admitted to the hospital for COVID. And so what employers are now coming to understand, that having invested properly in prevention, you can actually immediately reduce the comorbidity effect of the mortality of COVID-19. And in fact, when we looked at up to 40,000 of our patients, we saw that when they came in for routine annual preventive visits, they had half the prevalence of those risk factors. Mm-hmm. So I think this epidemic has been really interesting in getting employers focused once again on getting everybody in for prevention and getting health maintenance finally to where it needs to be, namely for everybody.
So then, Dr. Levy, how do we do that? I mean, is it going to come down to smart, candidly cost-conscious, but also health-conscious and employee-conscious employers forcing the system to change? Because the system doesn't seem to have the right economic incentives in place, I dare say, right now to achieve what you're talking about.
Right. I mean, now healthcare purchasing is all about the immediate return of investment and the reduction of healthcare claims. That's a very short-sighted approach. Those employers who are interested in the retention of talent, in optimal productivity, those are the employers, and frankly, who are our customers, who say, wait a minute, we need to look at the entire balance sheet of good health, not just on healthcare claims, but on productivity, on retention, engagement, reduction in short-term disability, long-term disability, and all of those things. And that's where the rewards are very, very big. But you're absolutely right. It is very difficult to convince folks who are buying healthcare in the moment to have a longer view, because it's really, a year-to-year kind of a view on, what's my healthcare going to cost, as opposed to the long view on really what's optimal healthcare look like and optimal productivity.
All right. So one thing you could change right now, or get, corporate programs or corporations to change in terms of how they think about healthcare for their employees, that would be more about preventive rather than, oh my God, crisis, we got to do something. What would you do?
Well, now's no better a time because, I use this expression, COVID compresses time. So today, somebody for diabetes, you may have had, let's say last year with diabetes, you may have had 10 or 20 years to worry about if they were going to die of the complications of diabetes. Well, with COVID around, they could die tomorrow. And so now is the absolute perfect time to get involved in prevention, because it's not even an investment for the next 10 or 20 years. It's an investment for today, because with this pandemic and with all of these people potentially exposed to something that could kill them tomorrow with one of these lifestyle illnesses, invest right now, no better time. That's my point of view.
All right. Well, here's hoping. I think you've sold us, Dr. David Levy. We certainly believe in preventive medicine. And listen, I think more and more companies are thinking about this. Yep. We talk about COVID really being the great accelerant. And I really liked your phraseology there that COVID compresses time. We certainly have felt that in many ways. And it feels like it is forcing us to reimagine, Carol, a lot of different industries. Dr. David Levy is the CEO of EHE Health. He joined us on the phone from New York City. Great context.
Let's go on the T-shirt list. The other thing is either we do this or we all go back to being farmers so that we actually get physical activity on a regular basis.
Say farmers?
Farmers.
Oh, okay.
Listen, if you think about it, when you're physically active, I have brothers who are contractors who are, in great shape because they are physical all the time. And so I think we need to rethink, because right now you and I are doing a lot of sitting. I'm just going to say that.
That took a turn. I did not know that my future involved farming. I mean, I was upstate over the weekend, and I can tell you, farming, I would not be good at it. I'm just saying. Right now, I could be. All right, let's head down to Washington and Nancy Lyon. She's got World National Headlines. Hey, Nancy.
Hey, Jason. We'll see the first face-off tonight between President Trump and former Vice President Joe Biden. The debate is being held in Cleveland, and former Obama Chief of Staff Rahm Emanuel says Biden needs to be ready for personal attacks.
When the attack comes, and it will come personal, Joe Biden needs to deflect it with, look, I can say a lot about your family. You can say whatever you want about my family, but that has nothing to do with the American family.
Former New Jersey Governor Chris Christie has been helping with President Trump's debate prep. He says the public is really not concerned about a New York Times report showing the president has barely paid taxes over 20 years.
They want to know about their futures and what taxes they'll be paying over the next 4 years, rather than what taxes the president may have paid over the last 20.
You can tune in for live coverage of the debate beginning at 8:30 p.m. Wall Street time right here on Bloomberg Radio as well as Bloomberg Television. Kentucky's Attorney General has agreed to comply with the judge's order to release the recordings of the secret grand jury proceeding that considered charges against police officers involved in the fatal shooting of Breonna Taylor. A grand jury member sued to have the record of the proceedings open to the public. Kevin Glogauer is representing that juror.
My client wants to make sure the truth gets out. My client wants to make sure that anything that happened in there becomes something of public knowledge to the extent it's legally allowed to.
The grand jury issued charges against one officer for endangering 3 of Taylor's neighbors by firing through her home and into adjacent units, but they failed to indict any officers for Taylor's death. The grand jury transcripts will be released tomorrow. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. Well, a story essentially being confirmed today, Carol, that Bloomberg News had reported last week. We talked about it, which is this spoofing scheme. I think it's fair to say that JP Morgan Chase, its traders pulled off. They are going to pay more than $920 million to resolve claims of market manipulation. 2 of the bank's biggest trading desks. It's the largest sanction ever tied to the illegal practice known as spoofing. It's a lot of money.
That is a lot of money. And I know we kidded yesterday when we talked about this. It's like we often see these huge fines and then the firm and everybody's like, we didn't do anything wrong. I mean, these guys admitted wrongdoing. I am curious, though, Jason, because let's see, over 8 years, 15 traders, the biggest U.S. bank, caused losses of more than $300 million to other participants in precious metals and treasury markets, according to those court filings. What did it make for JP Morgan, though, in the process? Do we know?
Yeah, it's an interesting question. I don't know if our reporting has pulled that off, but or has released that, and we'll continue to look into it. I mean, it's interesting when you dig into this. I would call back to a story we actually talked about yesterday,
right,
which was a really nice Tom Schoenberg profile of this desk, especially the metals desk, the metals trading desk at JP Morgan, and sort of what was involved and the culture of it. And you start to see, and this is not in any way excusing the behavior, but you start to see how this sort of thing starts to happen, because this was not a rogue individual. This was a group of individuals who pulled this off, and it was a long-term thing. This wasn't like, I made a mistake, or like, hey, do you think we can get away with this today? This was 8 years.
It's a long time. And at a time, post-financial crisis, where there are a lot of checks and balances that have been imposed into financial systems.
Or maybe not.
And a lot of oversight. Exactly. Wall Street,
I have some evidence to the contrary, actually.
Oversight, not working so well. Exactly. I have evidence to the contrary. Oh, my God. This is Wall Street.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. NASDAQ and the NASDAQ 100 Index, they're both higher. The Dow, the S&P lower. The end-of-month rebound in global equities is fading, with equities trading mixed as investors weigh prospects for fiscal stimulus and the outlook for the coronavirus pandemic. Data showing New York City's rate of positive tests rose above 3% for the first time in months, certainly weighing on sentiment. We begin with the S&P, down 4 now, a drop of 0.1%. The Dow down 41, down 0.2%. NASDAQ up 10, a gain of 0.1%. 10 years up 230 seconds, the yield on the 10-year 0.64%. Gold up $16 the ounce, up 0.9%, $18.97. And West Texas Intermediate crude oil now down 3.7%, $39.12 a barrel. Recapping, the equities mixed, S&P now lower by 5, down 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Well, two of our faves on the line now, and This is a story. It's timely. It's well reported. So many things that we always ascribe to both Business Week and to this reporter, Sean Donnan, Senior Trade and Globalization Reporter for Bloomberg. He joins us from Maryland. His story is a fantastic preview, a different sort of preview of what we're going to see tonight, because it takes us right to the site of the debate. Sean is with us along with Joel Weber, the editor of Bloomberg Business Week. So, Joel, this is a piece that you can find online and on the Bloomberg terminal. Tee it up for us.
So Sean has spent a fair amount of time going to places that I think are really important, in part for the election, but also in part of the bigger story that is sort of upon America right now. And Cleveland has actually figured into that reporting a lot. This is sort of part 2 of a Cleveland series that he's been working on, and it's specifically about the Cleveland Clinic, which is sort of a renowned medical center. But what's actually been interesting, and this kind of gets right to the heart of Sean's story, is as the clinic has thrived, basically the black neighbors and the black neighborhood that surrounds the Cleveland Clinic has actually seen its health deteriorate. Sean, pick it up from there. What did you discover during your reporting?
Yeah, so I mean, the Cleveland Clinic is this world-leading health institution. If you are going to get a heart bypass operation, this is probably where you want to go. It's the place where they really perfected it in the 1960s, and they've built a whole fortune, a real thriving business on the back of this. The Cleveland Clinic last year had $10.5 billion in revenues. It's going to open a new hospital in London later this year. It's also in the Middle East. It's opening a new hospital in China in the next couple of years. It's become this world-renowned institution, and it's also become a great example of what people talk about when they talk about the eds and meds economic development model for cities. You know, after manufacturing left a lot of cities like Cleveland, people were looking at alternatives, and they looked to education and they looked to the healthcare sector, and we've seen institutions like the Cleveland Clinic thrive in recent decades. The problem is that you go to Cleveland, you step out beyond the main campus there. It's 165 acres in the middle of Cleveland, and you walk not even a couple of blocks. You walk a block, and what you discover is you are in neighborhoods that have some of the highest poverty rates in the nation, and where a kid who's born today has a life expectancy that's 20 years less than a kid who's born a 15-minute drive away. And that really, right now, in the middle of an economic crisis, illustrates this kind of American paradox that we have in terms of inequality. You can have world-beating institutions like the Cleveland Clinic, and right next door you can have black neighborhoods that are just really just being left behind. There's no other way to describe it.
All right. So describe to us, though, what the CEO of the Cleveland Clinic told you. I mean, I got to read the quote. Cleveland is in our name, he says, but we cannot thrive as an organization unless the communities in which we reside thrive with us. So there they see it front and center. How are they dealing with it? What are they doing to change this, conversation?
Right. So that CEO, Tom Mihaljevic, is a Croatian-born heart surgeon who took over as the CEO of the clinic in 2017. And he says he has made raising up the neighborhoods around the Cleveland Clinic one of his priorities. And he's recognizing tacitly by doing that they haven't done enough in the past to do that. And so they're starting, and we should say they're starting slowly to invest in different things, whether it's adding to their work in community health centers. And there's a big project that's about to get launched right next door to the Cleveland Clinic. It's a project called Innovation Square. It's being run by Community Development Corporation there. It's going to cost about $300 million over the next 5 years to really redevelop a neighborhood and bring back grocery stores, because we're talking about food deserts right around the clinic there, bring back new housing there. And the Cleveland Clinic says it's going to get involved in that project. We don't know how much, but we need to put that all in perspective at the same time. So we're getting this kind of goodwill from the Cleveland Clinic, but there's this $300 million project next door, and you put that in the context of the business that is the Cleveland Clinic. Over the next 5 years, if they keep going the way they've been going, they're going to make something like $50 billion in revenues. Wow. That entire $300 million project is 0.6% of revenues. They're also sitting on $1.5 billion cash in hand at the end of June, which means that they could effectively just write a check for this entire project, and they're not. So it's a complicated story. It's tough because the institution recognizes the problem. It clearly is trying to do something, but there's big questions about whether they're doing enough.
So, Sean, synthesize this with some of the other work you've been doing, because there is a political undercurrent to all of this. You are describing one of the key economic questions of this entire presidential race and this election year in many ways. All these things that have been laid bare by not just the coronavirus crisis, but this overdue reckoning with race and inequality in America. How does this fit in with some of the other things you've seen as you've been doing reporting about some similar places that illustrate inequity in this country?
Yeah, well, look, I mean, we know that President Trump was riding at what he considered a healthy economy into this election year, and that the pandemic upended all that. But what the pandemic really did was it shone a spotlight on these real structural inequalities in the American economy right now. And the real risk that we have right now coming out of this economic crisis is that these things are only going to get worse, that they're not going to get better. I've got some more reporting coming that'll look at the housing market in Cleveland, which is really interesting. But the reality is we sometimes forget it, because a lot of us are sitting at home and we're spending time with the kids and we're learning how to bake bread. Yeah. But there's a lot of people out there who are really being damaged in this economy and who are hurting in this economy. And in some cases, those are people who were hurting beforehand, but we kind of tended to have forgotten about.
Yeah, well, it is a phenomenal piece of reporting, as always. Sean Donnan, your body of work, I feel like, has been at the core of all of these issues that we're wrestling with, and we have to keep wrestling with. So thank you for bringing this story to us. Sean Donnan, Senior Trade and Globalization Reporter for Bloomberg. He joined us on the phone from Maryland. Check out his story. It's online and on the Bloomberg terminal today. Our thanks as well to Joel Weber, the editor of Bloomberg Business Week. I'm going to think about the Cleveland Clinic different way when I'm watching the debate tonight, Carol.
Yeah, and the thing is, you're doing all these great things around the world, but if you're not helping the people right in front of you, how good is that?
Yeah.
All right, for those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you are listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. And coming up next, we're going to talk a little bit more about what ails the U.S. economy. We're going to check in with the chief economist at Myers Research. That's coming up right here on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Tuesday, September 29th. The Dow, the S&P, NASDAQ all lower now. NASDAQ had been trading higher just a few minutes ago. Right now showing a loss of 3 points, down less than 0.1%. NASDAQ 100 index also down 0.1%. S&P lower by 6, down 0.2%. The Dow has dropped 53 points, down 0.2%. S&P inching lower, led by losses in energy and financial companies after talks on expanding aid ended for the day, with plans to resume discussions tomorrow. And data showing New York City's rate of positive tests rising above 3% for the first time in months is also weighing on sentiment. So we are just a matter of hours, 6 hours away from the first presidential debate. Our coverage will begin at 8:30 p.m. Wall Street time. The debate kicks off at 9 p.m. Wall Street time. Mandy Zhu is a chief equity derivative strategist at Credit Suisse Securities. And on Bloomberg Television this morning, we asked her short term, just what is it that investors will be focused on?
Absolutely. It's who wins. The fact that we have a resolution, I think would be a big positive for markets. But longer term, I do think the biggest risk right now facing market is the potential for a stalled economic recovery, especially with latest economic data coming in showing the momentum already slowing.
Goldman Sachs Group has shuffled its business lines and announced a raft of management changes, carving out new divisions aligned with a strategy pivot unveiled earlier this year. Goldman Sachs shares, they are down now by 1.1%. Sources tell Bloomberg Royal Dutch Shell will announce a restructuring of its senior management tomorrow as part of a wider reorganization. Royal Dutch Shell's, its ADRs, down now by 1.8%. S&P, as I mentioned, down 7, a drop there of 0.2%, 10-year yield 0.64%, gold up 0.8%, $18.96 the ounce, and West Texas Intermediate crude down 3.6%, $39.13 a barrel. Recapping, S&P lower by 8, down 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, for this edition of Business Week Economics, let's check in with Ali Wolf, chief economist at Myers Research, joining us on the phone from Irvine, California. Ali, really good to have you back with us.
Hi, Jason and Carol.
Hi.
Thank you for having me.
All right, so can we make sense of the economy in like 6-7 minutes here with you? Because
no pressure now.
No pressure, but it's kind of a mess. We're trying to find the right data. We're dealing with a potential second wave and a presidential election that's throwing all sorts of headlines at us. What do the data tell us?
So I love that you said we're trying to find the right data, because if you guys saw this morning, consumer confidence trends came out. And August, last month when we were talking to clients, we said, hey, just watch out because consumer confidence is at the lowest level since the pandemic started, lower than March and April. We were like, what are consumers telling us? And then today, of course, September came out the highest level since the pandemic hit. So I think right now consumers are going through the same whiplash as industry analysts. It depends on the day, the data, the trend, and you get a completely different story of where the economy is.
So how important, though, is all of that consumer sentiment ultimately on additional stimulus we get from the pandemic, especially if we continue to see the economy having to remain in some kind of lockdown state, if we start to see more waves? Talk to us a little bit about that and how much of this also is dependent on the jobs environment and whether or not we see people going back to work or continuing to go back to work.
Yeah, and I think that's been one of the surprising things is as we do look at the data, the economy is holding up. I know that there's a lot of talk that it's losing momentum, but it is holding up all things considered. We're still in the middle of a pandemic, and as Jay Powell said at his press conference, we're learning to live with the virus. And as I talk to some of my coworkers across the country, they say life, depending on where you live and depending on how you're thinking about the virus, looks pretty normal. But the concern at this point is that the easy gains have been made. As you mentioned with the jobs, yeah, we're still adding jobs, but we're 11.5 million people shy of February in the labor force. And that doesn't account for the 3.7 million people that have just ultimately left the labor force since February. And that's one of the biggest things because a lot of people are stepping out for childcare reasons.
So let's talk about something that we have talked a lot about on this program, and I'm dying to get your take on it, Allie, which is the K-shaped recovery. When you said something a minute ago about sort of depends on who you are, where you live, what your job is, that calls to mind this idea of the K-shaped recovery. Give me your reaction to that notion and that description of this recovery that we're in, whatever it may look like.
The K-shape is the reason we do not have another stimulus deal. Because if you look at the stock market and you look at the unstoppable housing market, there are parts of the economy that, why do you need to give them additional money? And I think a lot of economists, myself included, said, oh gosh, watch for the end of July, we're going to really see the economy tank. And it's held up, all things considered. So that's been one of the biggest issues, but as we're seeing today, Pelosi and Treasury Secretary Steven Mnuchin are looking at maybe getting closer to a stimulus deal, but they have to be careful because I agree with the Republicans. We don't need another $2 to $3 trillion because we already have trillions of dollars sloshing around in the economy. But I agree with the Democrats that it needs to be targeted because if you're in a K-shaped recovery, don't keep giving money to top half of the K and expecting a different result. You need to make sure that that bottom half of the K is getting the right money when they really need it.
Well, how important, and let's talk about this, that bottom part of the K, how important is it ultimately to the U.S. economy? We, ad nauseum talk about the importance of small business owners and small businesses to our economy. Are we providing enough aid for that part of our economy?
No, we're not providing enough aid right now. And I think another one of the issues is if you look at the savings rate, if you were in the bottom half of the K and you were getting that extra $600 federal stimulus, we know the stats, about 60% of people were earning more money by being on that unemployment insurance. They've been able to save some of their money. So when you look at the personal savings rate, that looks okay, but that's going to start coming down. And that's coming down partly because the top half of the K is going out and spending money, but partly because the bottom half of the K is now starting to run out. They're starting to tap into their savings accounts, and that's not unlimited. That's not going to go on indefinitely. So we have to look at what's the top up to the unemployment insurance. I know there's that joke about the lazy economy giving the $600. So, okay, fine, do the $300. But make sure you're also giving money to the state and local governments, to small businesses, to people on the rent and mortgages so they don't end up homeless. So there still just needs to be a really, really targeted effort.
What happens if we don't get that? What does it look like and how soon do we see it, Allie?
Well, the economy is going to backpedal, but it's not going to happen that quickly. Again, that's kind of been the lesson learned to all of us, is when you throw $3 trillion into an economy that only slowed for 2 months, that actually can keep you going for a while. So I don't think we're going to see that backpedal. We'll see the savings start to go down. We'll see the amount of people unable to pay their rent or pay their mortgage start to increase, but that's going to be a slow burn, maybe the next 6 months.
Yeah, I mean, I just feel like it's just a tricky moment. Listen, the debate tonight, just got 30 seconds. What do you want to know on the economic front from Biden and from Trump, just quickly?
Are they able to bring back bipartisan politics? Are they able to put things aside and actually make sure that we don't backpedal in the economy?
No. I mean, really, Allie, what do you want to know? I mean, let's be real.
Hope springs eternal, Allie. We really appreciate it, as always. Allie Wolf is chief economist for Myers Research. She joined us on the phone from Irvine, California. Some really nice analysis there of the K-shaped recovery and sort of how we need to be thinking about it. And she's exactly right. The K-shaped recovery is why we haven't gotten more stimulus.
Remember those days when we had bipartisan politics?
It's adorable.
It was just so sweet.
I know.
We'd sit around the radio and listen to...
Sit around the radio and tune in to the shows on Saturday night. Jack Benny, he was a cut up.
God, it was just such a sweet thing.
Yeah.
Great discussion. And she's so right. The K-shaped, I mean, God, Peter Atwater, just love him and that thinking and that, I mean, it just really makes sense in terms of where we are and why things are happening or not happening in terms of additional stimulus.
Right, because you look at the top half of the K and you think, yeah, it's fine. We're good.
Yeah.
Working from home.
Yeah,
It'll be fun.
Exactly.
All right, let's get down to Washington now. Lots of world and national headlines to get to with Nancy Lyons. Hey, Nancy.
Hey, Jason. President Trump and his Democratic challenger Joe Biden will be meeting on the debate stage tonight for the first time in Cleveland. Millions of voters will get their first opportunity to compare the candidates' policies and personalities side by side on national television. It's going to run for 90 minutes. Bloomberg contributor and Iona professor Jeannie Zaino says Biden needs to stay on message.
I think Biden needs to focus like a laser beam: COVID, the economy, healthcare. That's what he needs to talk about. He needs to be empathetic and show that he is a different potential president than President Trump.
The moderator for tonight's first of 3 presidential debates is Chris Wallace with Fox News. You can tune in to Bloomberg Radio tonight at 8:30 Wall Street time for live debate coverage and analysis. Republican senators are welcoming Supreme Court nominee Amy Coney Barrett to Capitol Hill today as she begins meeting with the lawmakers ahead of her confirmation hearings. Vice President Mike Pence was with her for today's visit.
We have someone of great character, of great intellect, who has a judicial philosophy that will uphold the Constitution of the United States.
Republicans are rushing to get Barrett confirmed before November's presidential election. Democrats argue that Justice Ruth Bader Ginsburg's replacement should be chosen by the person who wins the election. House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin are still talking about a possible stimulus package. President Trump has indicated he could agree to as much as $1.5 trillion in aid. But even that is more than the $650 billion skinny bill put forth by Senate Republicans. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. So a pair of stories that you and I both saw this morning, Carol, and I wanted to stitch them together if we could.
Sure.
So Barclays, not surprisingly, saying the end of the American city, it's an urban myth. It's not going to happen. And we know from history that people ultimately will gravitate back toward the city. Maybe they look a little bit different. Cities do, big cities, but everything's going to be fine. Probably true. On the other hand, a study looking at what's going on in Manhattan offices. No one's going back right now. They're not going back to work.
Yeah, I mean...
They're not going back to the office, I should say.
Right. Or it's definitely happening at a much slower pace than we're seeing in most other major U.S. cities. And so there is concerns about what does this mean for the New York City economy. I mean, the longer we are all away, the longer there is that trickle-down effect on the small businesses that are in the New York City economy. I mean, it just impacts the city in so many different ways. And that means you get a much more protracted and potentially painful recovery for what is a really important city to the overall U.S. economy.
So here are the numbers. Back in July, there were about 6% to 8% of office workers back in Manhattan. You thought, all right, it's summer, it's July. People have given folks some time. Let's wait till after Labor Day. And listen, it's early days. We're not even to October. We're almost to October, but not even there yet. As of September 18th, that had ticked up to 10%. So it's still a very, very small number.
And perspective, nationally, about 25% of office workers have returned as of month on average. Some large metro areas, you're seeing much higher numbers. Dallas, 40%. LA metro area, 32%. And the reoccupation rate in New York suburbs, it's 32%. So we're seeing a continuation of people moving out of the city.
Can I tell you the one thing I can say in one word, that 10%?
What?
Schools.
Yeah. And look, and now we're all a little bit nervous as we see the virus uptick numbers that happened and that came out today. Yeah, it's really tricky. This is why it makes New York so tough.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelleteau. Before the presidential debate, you'll hear it live, 9 p.m. Wall Street time, right here on Bloomberg Radio. Our coverage kicks off at 8:30 Wall Street time. Right now, though, we're looking at a mixed Tuesday, so let's head over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks choppy in a quiet session today. Dow's currently down 36 points. S&P's dropped 5. NASDAQ is higher by 2. The U.S. 10-year yield at 0.65%. Gold trading higher by 16. Transports fall 91 points. And among the main 11 S&P sectors, only utilities, telecom, and healthcare were in the green, while financials and energy led to the downside. Leaders to the upside in the Dow, Nike, Amgen, and UNH, while Chevron and Travelers were under pressure. In other news, the exchange stocks plunged intraday as Wall Street data pricing is a target for Trump's antitrust cop, and Domino's Pizza traded to a record $4.29 a share. After earnings, McCormick fell as much as 6%. And wrapping things up, Micron reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. We'll be all over those Micron numbers as they break into here. Live breaking news over your Bloomberg type squawk. SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate it. In this week's edition of Bloomberg Business Week Small Business Survival Guide, TikTok, many small business owners, who took part in the Paycheck Protection Program, they got loans as part of the program. They are watching the clock because they're now waiting on the forgiveness of those loans. Let's talk about that with Bloomberg News editor Dimitra Kesanidis. She's joining us on the phone on this Tuesday. Man, that program was a lifeline for many, but I think some of them are now nervous.
Oh, yeah. Some of them are very nervous right now. There were millions that applied for it. You know, about $525 billion was disbursed in aid. And from the beginning, one of the things that was really emphasized with this program was that many of these loans would be forgiven, provided that you met certain criteria. And that, you know, we still believe that that will be the case. But of course, as we've experienced with this program from the very beginning, there have been many delays. There are questions now about whether new programs are going to be approved by Congress in the coming weeks. So many lenders are encouraging small businesses to hold off on submitting the forgiveness applications. But, you know, when you're confronting loans of any amount, you know, it could be $150,000. You're a very small business. It could be double that amount, you know, and you're thinking that it's not an amount you can pay back. It's really causing a lot of anxiety right now.
And so what is, it's a great piece by Nick Leiber that is available via the terminal and businessweek.com and through the Small Business Survival Guide. Dimitra, what can they do? Especially because we're all sort of waiting for more stimulus. What's the playbook here?
Sure. Well, you know, we have several pieces of advice. Nick interviewed Chris Levy. He is the senior vice president at one of the CDFIs. You know, we've talked about these a lot, Community Development Financial Institutions. And this is a person who has a lot of experience with these loans. So the advice from Chris and from others that Nick has talked to is, you know, first you really do have to just kind of take a step back, take a deep breath, and be patient. But use the time right now because Pursuits, which is the name of the company Chris Levy works for, and other institutions and lenders are not yet processing these applications. The reason they're not is because they are anticipating that Congress is either going to approve another PPP-like program or they're going to pass some other legislation. There's broad bipartisan support for a handful of programs that are going to better define the terms of the forgiveness, which is going to make the application process easier. So that is a point to emphasize, that if you're patient and if we hold off on actually submitting right now, it'll save us having to resubmit, having to refile documents. So use the time to gather up all the information you're going to need, you know, the information about your payroll, about your rent, about what the other expenses were that you spent the PPP on. Read up on what the various changes have been over the last few months with PPP, either from the website of your own lender or from many other resources that exist out there on the Internet. and then be prepared to have a process that's going to go a little more smoothly once they say, yes, okay, now we're ready to process these applications. So it's tricky because it is testing people's, patience. And again, you're anxious and you think, well, what you're telling me is I just have to wait. That really doesn't sound,
patience?
That's not a great answer. But there's so many intricacies here, and there are so many rules and regulations that changed over the last few months. So it's really good for a small business to become as knowledgeable as they can and to really then also consider going forward. Let's say there are going to be new programs, to really consider what's maybe going to make the most sense for them in terms of what their needs are going to be, because this is a process that, of course, will inform that and will help them.
Well, and if there's a lesson here, right, as you guys write in this story, and as Nick reports, I mean, this whole program has evolved as this situation has gone on, and that's something to keep in mind.
Exactly. I mean, I think that not in haste, but, somewhat hurriedly, the program was put together because of the great need. An agency that typically deals with a fraction of the number of things that the SBA has been dealing with has been inundated with all kinds of applications and other matters that they need to deal with. So it does take time. Also, once you submit that application, there is still a waiting period. There's a 10-month period that they can, that the SBA can take to make a determination. Then, so you do have to accept that there's a lot of time built into this because of volume and number of applications, and again, factors that might change. There are, categories that haven't been very well defined. Some lenders have said that now they're reading that the PPP forgiveness, if you also received the other type of loan that we've written a lot about, the EIDL loans, the economic income disaster loans, that amount then must be deducted from what you received from PPP, and you'll get forgiveness on that amount, right? On the PPP minus the EIDL. That seems to be news to many people who are now handling these situations. So there's further clarity emerging on the way that this is being approached. And I don't think, we have to believe that this is really born again of just so much that everybody is dealing with, and an attempt to really just be as clear as they can be once.
Right.
And it all happened so quickly. I mean, if you think about it.
So fast. And we knew that things were not maybe going to go super smoothly. Dimitri Kasanides, thank you so much. Check out more of those stories just like this at the Small Business Survival Guide at Bloomberg.com. Coming up, more from our pal Lisa Abramowitz, her big special this weekend. Check it out. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Coming up, a preview of the upcoming special from Lisa Abramowitz, Generation Interrupted. What's been going on in this pandemic from an economic perspective, Carol?
Yeah, it's not good, and long-term impacts could certainly be detrimental, especially for that younger generation. All right, we'll get back to that in just a moment. Let's get back to your top business stories. Another check on that trading day. Here's once again Charlie Pellet.
Thank you very much. Rally interrupted with the Dow, the S&P, NASDAQ all trading lower. 28 minutes to go ahead of the closing bell right now. The end-of-month rebound in global equities fading. Most stocks falling as investors weigh prospects for fiscal stimulus in the U.S., along with the outlook for the coronavirus pandemic. S&P inching lower. 3 stocks falling for every 2 that advance after talks on expanding aid ended for the day with plans to resume discussions tomorrow. Also, data showing New York's rate of positive tests rose above 3% for the first time in months, certainly weighing on market sentiment. Here's where we stand. S&P down 8 now, a drop of just about 0.3%. The Dow is down 62 points, down by about 0.2%, and NASDAQ down 16, a drop there of 0.1%. 10-year up 1/32, 10-year yield 0.64%. Gold up $14 the ounce, higher by 0.8%, $18.96 right now. West Texas Intermediate crude down 3.9%, $39.01 a barrel. Sources tell Bloomberg Tesla has secured its own lithium mining rights in Nevada after dropping a plan to buy a company there. The sources say the automaker held discussions in recent months with Cypress Development Corp, which is seeking to extract lithium from clay deposits in southwest Nevada, but the parties did not reach a deal. Tesla shares down now by 0.2%. 3:33 on Wall Street. Time now for the Small Business Report. Here's John Tucker.
Airlines have been devastated by the pandemic, but there's actually one segment of the aviation industry seeing an uptick in business: flight schools. Paul Salik's small business is in Las Vegas, Nevada. He runs All In Aviation. Paul, are people really coming out of the woodwork right now to learn to become private pilots?
Amazingly enough, we've been busier than we've ever been. I think people that can afford, private aircraft travel have now given themselves permission to get the license that they always wanted to get, so that they can take their family and their associates on personal travel or on business travel, as opposed to going in the airlines. So we've actually seen quite the uptick in aircraft sales and people learning how to fly.
It sounds like people want to avoid commercial travel altogether and just do it themselves, and they think it's safer that way?
Yeah, instead of going through TSA and jumping in an airplane with 150 people you don't know, you get in an airplane with just those loved ones or those associates, and you can go, point A to point B direct to your meeting and be home the same day. And it's always been available, but the cost of doing so has always been higher than the airline. But now people, for their own personal safety and those of their loved ones, I think they're giving themselves the okay to go ahead with it.
This is definitely in the category of discretionary income, right?
Yeah, a discretionary or business. I would say most of our customers are small business owners that have a regional travel need.
Hey, Paul, thanks a lot. Paul Salik is owner of All In Aviation in Las Vegas. I'm John Tucker. That's your Bloomberg Small Business Report.
And John Tucker, we thank you. One other business note: Harvard's endowment returned 7.3% in the latest fiscal year, lifting assets at the largest U.S. college fund to $41.9 billion. According to a statement, the performance for the 12 months through June 30th beat the prior year's gain of 6.5%. Recapping equities lower, S&P down 9, a drop now of 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right,
Charlie. Thank you so much. Carol Masser?
Should we talk about this? Because this is, I think, a great series. We know the coronavirus, Jason, and the pandemic. It's definitely a public health crisis. We talk about that all the time. But it's also an economic crisis felt by millions around the country, and the pain has not been distributed equally. That's something you and I talk about with most of our guests. The youngest members of the workforce, they have borne the brunt of the fallout, and, Jason, they could face permanent damage.
Yeah, absolutely. The K-shaped recovery is one way to look at it. This is another way. The notion is generation interrupted. Bloomberg Surveillance co-host Lisa Abramowitz, she tackles this topic. It's a Bloomberg TV special that will air this coming weekend. Here's a preview.
When it comes to job losses from the pandemic, the youngest workers are bearing the brunt of it.
Whenever we have a recession, the kids who are graduating from high school or college right around that time do face really significant labor market pains that can last a decade.
Betsy Stevenson is a professor of economics and public policy at the University of Michigan. She says the sharpest recession in history has young professionals fighting for fewer jobs, but even those who are lucky enough to land a position are finding their upward mobility hampered by the fallout from the pandemic.
They're not getting the promotions that you usually get. And for young people, the way you climb up and build your career is you get a lot of movement in your 20s. You know, you change jobs, you get promotions, and that's also missing.
And it's not likely to get better for that generation anytime soon. Employment projections from the Bureau of Labor Statistics call for just 6 million jobs added this decade. That equates to an annual growth rate of just 0.4%. But even that doesn't show how dire the situation could be. When Betsy Stevenson looks ahead 20 or 30 years from now, she sees another big impact for an even younger population. This, she says, is the most important factor we'd wish we had paid more attention to right now.
For me, that's not the kids trying to enter the labor market right now. It's the kids trying to struggle through Zoom school. You know, I think that we're not paying enough attention to the harm that is happening among those kids. It's not just their education that's being disrupted, their hard skills. Are they going to be able to do as much math? Are they going to be able to read as well? They also need the sort of social emotional skills that get developed in, you know, your standard K through 12 classroom, but even your college classroom. A lot of growing up in college is about those connections you make with your classmates late at night, debating issues, trying to figure out how you're going to see the world. All these things are interrupted for young people.
It'll be a while before we see the full impact for this virtual learning generation. But Stevenson says they too could end up being part of this generation interrupted by the pandemic. For more, join me on Friday at 7 p.m. Eastern for a Bloomberg Television special report, Generation Interrupted. And tune in tomorrow at the same time for part 3 of our Bloomberg Radio series. In New York, I'm Lisa Abramowitz, Bloomberg Radio.
All right, and do tune in this time tomorrow. Lisa Abramowitz, she'll be back with another preview of that special. It's coming up this weekend, and a really interesting topic around, you know, what's going to happen on the other side of this. It was interesting to put that in some perspective. You know, earlier in the show, we talked to the CEO of a big healthcare provider, Carol, and he was talking about healthcare on the other side of this as well. I mean, everything's changing.
The pandemic after the pandemic.
The pandemic after the pandemic. And what did he say? COVID.
Shoot, wait, I got to pull it up.
Pull it up. It's a T-shirt.
Oh, we're learning to break bread? No, that was no. Oh, COVID compresses time.
COVID compresses time.
Yeah. But we've
Big
seen
deal.
that, right? Think about the different companies that we've talked about in terms of initiatives, but COVID compresses time. We're learning to bake bread. That's Sean Dunn. See, that's 2 T-shirt phrases in one day.
I know, just from today.
And we're not even
halfway
yet.
done. Exactly. All right, let's get down to Nancy Lyons in Washington. She's got World National Headlines. Hey, Nancy.
Hey, Jason. President Trump and former Vice President Joe Biden will be taking the stage in Cleveland tonight for their first of 3 presidential debates. Bloomberg contributor and Iona professor Jeannie Zaino says Joe Biden will certainly face a challenge from Trump.
Can Joe Biden hold his own against a pretty tough competitor? Donald Trump may not have won the debates in 2016, but he won the election, and he knows how to throw off his opponent.
Biden has released his tax returns today. He paid nearly $300,000 in federal taxes on last year's income. That's a stark contrast with a New York Times article that showed President Trump only paid $750 in taxes in 2016 and 2017. Well, ahead of tonight's debate, the latest polling shows something of a hometown advantage for one of the candidates in a key battleground state. Bloomberg's Nathan Hager reports.
2 polls of likely Pennsylvania voters, one from the Washington Post and ABC News, the other from the New York Times and Siena College, give Democrat Joe Biden a 9 percentage point edge over President Trump in the state where he was born. The Post-ABC poll shows strong support for Biden in the Philadelphia suburbs as well as the western parts of the state that Trump carried 4 years ago. The Times Siena poll also suggests President Trump's Supreme Court pick hasn't shifted the race in the Keystone State. 51% of Pennsylvanians say they trust Biden to fill the high court vacancy, compared to 44% for the president. Nathan Hager, Bloomberg Radio.
A lawyer for former Trump administration National Security Advisor Michael Flynn has told a judge she updated President Trump on the case's status and asked him not to issue a pardon for her client. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. So a really interesting column today. Chris Hughes writing for Bloomberg Opinion. And what's interesting is, talk about COVID compressing time. I mean, COVID's also changing the way we think about offices, the way we think about work, showing up for work, not showing up for work, and even what work looks like when we get to the office.
What you don't want to be is a hot desk employee.
Yeah.
Because that means, man, if you had to do something in the morning and you don't come into work later, you are probably going to get a lousy seat at the office, especially for those companies that maybe pare back their space. Maybe they want to come back on rent. They're thinking, okay, we're going to do hybrid. Okay, I get that. That's fine. But we're going to cut back their space. So when you do come in, I'm sorry, you're over by the restroom.
Yeah,
That's just how
exactly.
It's gonna be.
Yeah, it's sort of fascinating to think about. And, you know, the idea, listen, you and I sort of move into our desks. I would really rue the person who would have to hot desk
Pigpen of Peanuts gang
at either of our locations. But, I mean, there's also this sense of like you're at one seat one day and then the next day you come in and you're like, hey, man, you're my seat. And it's like, not your seat, bro.
Yeah, yeah.
You're over there.
Yeah, exactly. Well, and
by
you
the
think,
ladies' room.
By the way, it's like when you go to that restaurant and then you're at the table by the kitchen. Are you like, are you kidding me?
I know. They're
I've
like
waited
coming
months
in
for
and
this
out.
reservation.
Yeah, exactly. I know.
What's interesting, though, is how this will be perceived by employees, right? Versus companies that say, we're going to maintain our space when you come in, even if it's just 2/3 full or half full, you're going to get more space when you're here versus those that cut back.
Yeah.
That could be a recruitment tool.
It totally could be.
Right?
And you know, when you're interviewing for someone, no, we don't do the hot desk thing. We, like to give our people a little more space.
Yeah.
I mean, people are thinking more about where they spend their time and if they are going to go into the office, what it's going to be like.
It's a break from home, maybe. That's
welcomed.
No space.
We'll see how it goes.
No hot desks here. Just going to say. This is Bloomberg.